सर हो गया लाइव.
Very good afternoon, everyone. I welcome you all to this virtual help desk on GST, company law, MSME. Today we are very fortunate that we have Manoj Fadnis sir, past president ICAI. I welcome you, sir. Sir, the help desk we have started. This is the second series we have started today. It has been inaugurated by the MLA West Bengal last time, Vivek Gupta ji. And the concept is that I was just thinking that how to help the members who have the queries. So then I find out that Zoom can be a better platform where the members can join virtually and the expert also can join virtually and we can reply to the query. And such help desk can be organized monthly. So that was the concept, sir. You know, in 2013 at the e-filing of tax audit report also, I had started with the help desk with the mobile phone helpline and email helpline. And that time, one day, strangely, I got your call, and you were direct tax committee chairman that time. Firstly, I was shocked that why I had. Am I doing some mistake? That is why I got the call. That time, in the instant for when you said that regarding e-filing, I want to say that time that was my that internal that I thought internally that then you started saying the appreciation. So the way that I just think that what we can be done for the profession. So the God gives the idea. And this time we are doing it in the under the banner of the GST. I'm the president here. Welcome you, sir. With these, I request Girdhari ji, who is also here, to kindly profile. I request Pallavi Chaudhary to kindly introduce her.
Good afternoon. Yes, sir. Good afternoon, everyone, and good afternoon, Manoj sir. Sir, I welcome you for the help desk seminar of views exchange, and I got the opportunity to introduce the Manoj sir. He is the past president of ICAI in 2015-16. He's also served as a non-executive director for ADA. And he's also served as a member of National Direct Advisory Committee of Central Board of Taxes, Central Board of Advisory Committee. He was also a member of Company Law Committee of Ministry of Corporate Affairs in 2015. And he has also nominated as a member of Small and Medium Practitioners Committee of International Federation of Accountants. Presently, as an independent director on the board of Federal Bank and also serves as a chairman of Audit Committee. He is also on the board of other listed and non-listed companies. He is also nominated as a member of Standing Committee of Accounting Issues constituted by ADA. He was also nominated by the State Bank of India as a director on the board of State Bank of Indore for 2002 to 2005. He was also nominated as Ministry of Corporate Affairs as director on the board of 2 companies for 3 years. He has also presented more than 1,000 technical papers in seminar and conferences within India and internationally. Sir, once again I welcome Manoj sir for this seminar. Sir, welcome sir.
Welcome, sir, and request you to kindly address.
Thank you very much, Nitesh ji, and thank you, CA Pallavi ji, for that kind introduction. Dear members, it is my great privilege and honor to be present in this virtual meeting organized by CA Nitesh Morji on a very important concept. The concept is to help the members. As he said, his object, his passion is to see how best he can facilitate this learning process and help our members in respect of the day-to-day matters. And I'm very happy to see that he has picked up very relevant topics on GST, on direct taxes, company law, MSME, RERA. These are topics with which the members have problems on a day-to-day basis, different types of problems. Each problem is unique. So rather than organizing a discussion or a speech on a specific subject, it is like a brain trust. So whosoever member has a problem can come and join this and get his or her specific problem resolved. I think Niteshji, this is a very wonderful, very unique idea which you have come out with. My sincere compliments to you for this wonderful thought process. As you mentioned, our first meeting way back 10 years ago now in 2013, when at that point of time, the e-filing of tax audit reports was at a very infant stage. And in those days, I recall, there were a number of practical problems, number of teething problems, and each problem was unique in itself. That point of time when Niteshji was neither an elected representative, he had on his own started a program whereby many people were connected. Those days we did not have such virtual meetings, but people were connected through mobiles and through Google groups, and members would come and participate in those sessions. I still vividly recall that Niteshji in those days had helped our members enormously in ensuring that the tax audit reports are filed correctly and within the time. Similarly, I find today, Niteshji, you are again not an elected member as of today. You are a very illustrious past chairman of the regional council, and you certainly have a long way ahead in the professional representations in our institute. But the kind of zeal and passion with which you have organized this is really very, very impressive. My compliments to all the guest speakers who have spared their valuable time and who have joined this program to help our members. So my special thanks to our guest speakers, Vivek Jalanji and Gaurav Guptaji, I can see on the screen today, right now, and the other very illustrious people who are to join later on. My sincere compliments to them too for joining this program. So I'll not take much of your time, Niteshji, but I'm sure you will continue to do such wonderful initiatives and activities for the betterment of our profession. Thank you very much, and very happy learning to all our sisters and brothers in the profession. Thank you so much.
Thank you so much, sir, for joining today. And your presence would certainly encourage us. Your gracious presence has certainly encouraged us in future also. Whenever we call, I am sure that you will be there to support the members, to enrich the members with your vast experience. Thank you so much, sir. With these, I request Vivek Jalanji, the Pallavi, to kindly take the things forward.
Thank you, sir. Now thank you, everyone. Now I would like to introduce Gaurav Gupta ji, Advocate Gaurav Gupta ji, before continuing the session. Sir, Gaurav Gupta ji, Advocate Gaurav Gupta ji is a graduate from Sri Ram College, Commerce, Delhi, and he has done his LLM in 2021. He is also a practicing advocate in High Court, Delhi High Court, tribunals and other courts also. He has more than 18 years experience on indirect taxation on various sectors like infrastructure, power, education, FMCG, financial services, etc. He is also author of many titles on GST, like Goods and Service Tax, Law and Practice, and other books. He is also elected as an member of an executive committee of Sale Tax Bar Association of Delhi in 2021-22. He is a special invitee in National Executive Committee of All India Federation of Tax Practitioners in the year 2022. He is also a member of Indirect Taxation Representation Committee of All India Federation of Tax Practitioners in 2022. He is a founder and member of Society of Tax Analysis and Research. He is also a member of STBA in 2020-21. He is a convener of the Delhi Study Board on GST ICAI 2016. He is a member of Indirect Tax Committee of ASCOM. He has also addressed more than 600 seminars on indirect taxation on various forums and professional bodies like PSD, Chamber of Commerce, ICAI, Institute of Company Secretaries of India, Sale Tax Bar Association, etc. So once again, I welcome Advocate Gaurav Gupta ji for this seminar. And now I would like to request Vivek Jalanji to continue the session further.
Yeah, thanks, Pallavi. And I would immediately start with the question and answer without much ado. Gauravji will start with the first question from Mr. Bharadwaj. He says, my client is a port company. Their business is to develop seaport and rent it for import and export. It's a government SPV actually. Now they have given the construction of the port contract to a reputed contractor who is constructing it for a charge, and it is also giving us input of GST. Now we want to know whether we'll get the input tax credit or not.
Vivekji, the question which this gentleman has asked, I think there are some gaps into this particular question. The company is into the development of port. So thereby it is also obliged to charge the government for the services provided, which will be classified as works contract as defined under section 2 subsection 119 of the CGST Act. So once your output is taxable, any person who will be providing you the services will also be liable to charge GST, and therefore you are eligible for ITC. If the question can be more specific in terms of why this ITC, what is the issue with the ITC, I think then we will be better in a position to appreciate the concern.
Yeah, actually, possibly what he wants is that he is into construction, is a port company.
No.
They are developing the ports. They are giving bundled service of port development, and possibly he's talking about the blockage under section 17(5) on works contract.
Vivekji, I think there are a lot of possible scenarios which can emerge in this question. Let us wait for this gentleman to clarify the question further. 17(5) does not, so 17(5) C and D does not become a barrier for a person who is providing an output taxable supply of further construction. But if you are giving it on rent, then if you are referring to safari retreat, the matter is already sub judice. Before Honorable Supreme Court, we have to wait for the final decision. But as on now, if you have to ask the position, you may take the benefit of the Honorable High Court decision in case of safari retreat, take your ITC, put it into a reserve till Honorable Supreme Court delivers its judgment under 17(5) C and D. So that is in the case of renting, if you are giving it on rent as a output taxable supply. But if you are constructing, then there is no barrier in terms of 17 subsection 5 and C and D. So I've answered both the scenario. I hope there is no further third scenario in this question.
I think there is one more scenario which this gentleman, I mean, what he is asking possibly is works contract is clear, renting you have clarified, wide safari retreats. Now, of course, that is again another issue whether the jurisdiction part, because this was a judgment by the Odisha High Court, and whether a person in other than Odisha can take it and keep it in the reserve. Notwithstanding, in case of any
whenever
other
there is a
service,
wires, let me also clarify, whenever there is a decision on the wires of a act is being challenged. So every jurisdiction can take it. It will not be a binding on the other assessing authority, but it will definitely have a persuasive value because it's a wires which is being challenged. So that
Absolutely.
benefit will be there.
Absolutely. It will be persuasive. All High Court decisions are persuasive. Now, third question, which he is saying, possibly in case of other services. In case of rental, you have clarified through Safari retreats. Now, if he has other output services, because it is a port into port development. Now, for that, I think in case there is an output service other than rental and works contract, then you see, possibly I feel that he should not take the ITC, or if he takes, it would be open to litigation.
Vivekji, the scenario will not change if Safari retreats will hold the rental. If Honorable Supreme Court will uphold the rental part as output taxable supply and 17.5 C&D will be allowed, in my humble opinion, every output will be eligible, which is directly relatable to that particular property or that infrastructure. ITC will be allowed. So we are waiting for the decision of Honorable Supreme Court. If that decision comes, it will not be limited to rental. It will have a ramification which will be very, very wide. So in my humble opinion, this gentleman, it can just take the credit, though it has not spoken about other services. I agree with you, he might be providing other services, but let him clarify. So we can proceed, I think, to the next question.
Right. So finally, let me just sum up. Since we should give the right service to the members, is number one, construction. If you are into works contract, go ahead and take. If you are into any other service, output supply of service, take the credit following the ratio of the Odisha High Court judgment under Safari retreats, and keep it under reserve pending the decision by the Supreme Court.
Correct.
Yeah. Next is our client has exported manufactured tobacco in the month of December 2017 by paying GST at the rate of 5%, and he has also got refund. But in September 21, GST department has completed audit, issued a report stating that our client is liable to a tax of 28%, where he has paid only 5%, whereas he has paid only 5%. Hence, that difference of 23% must be paid now. As per the relevant export rules, we can refund only in 2 years from the date of export. But now if we pay 23%, we have to lose everything. Our contention is, even if we paid 28%, we would have taken refund only. Hence, it's a whole revenue neutral effect case.
With a very interesting situation, I don't know how that 5% rate was adopted by your client and how that 28% was missed, and more importantly, compensation says you have not spoken about anything on the tobacco part. So interestingly, I think there is one more gap, which is on account of compensation says whether the department is demanding the same from you or not. In terms of 23% difference, what you are supposed to deposit, in my humble opinion, they can claim that from you. No bar on that particular thing, because you have not taken the benefit of LUT. So if you have taken the benefit of LUT, things would have been very, very different. Since you opted not to go for LUT, you were supposed to pay the correct taxes under the IGST Act, and the Act also allowed the refund under Section 54 of the CGST Act. Now, in case you are paying that today, the department will definitely put it under challenge that this is beyond limitation because your export happened in 2017. What you have to present to the department is, it is basically a amendment to the refund application, which was already placed, which is already processed. However, because of the amount which has been paid in respect of the same refund application, I'm talking which is beyond the law. There is nothing which has been written in this particular aspect in the law. So you have to request the authority by way of a letter amending the original application, and this matter will definitely go into litigation. That is 100% sure. So there can be two approaches to this particular case. Number one, you can challenge that particular demand outrightly, stating that this is under export and it is a revenue neutral situation. Number two, you can pay the demand. So let me just first complete the first part. If you challenge the demand, the Problem is that the demand is very correctly demanded by the authority, and there is nothing which is wrong in terms of technical part of that particular demand. The second aspect is it is revenue neutral. Revenue neutrality in terms of all the cases, whether it is subcontractor refunds, many courts have held that in those particular cases, pay the correct demand, the other party or you yourself. So reverse charge is also one very good example. If I go for revenue neutrality, I may not be required to pay the reverse charge because ultimately I'm an exporter. I will get the refund. So that particular plea, if I uphold, then no exporter will be paying demand under reverse charge. So my dear friend, I'm putting a caveat here. The court might not appreciate your pleading on that particular part that it is a revenue neutral aspect. Yes, on the part that you are an exporter, if a demand in respect of the same export is demanded from you, your refund in that particular, your right to refund in that particular context is also available to you. And more importantly, in such cases, no interest should be paid by you. So you can put this particular pleading before the honorable court in case number 2, where you are paying the taxes and claiming the same as refund. So I leave that particular choice with you. You can take both the cases. First case, the possibility of dropping the demand is bleak on account of revenue neutrality. In second case, getting the refund of the amount is very, very high because it is only in continuation of the refund which has already been allowed to you. Your views, Vivek?
Absolutely, I agree. Weak case,
Yeah,
but
Vivekji,
contestable
Vivekji
as
and
far as
Gauravji,
interest.
yeah, Gauravji and Vivekji, one request. I think that we can take first questions from those who are present, and then balance time we can take those who have received on the Google, because those who are present, if they want to ask the question, they first be given time. Then the balance time we can ask the questions, and then in the next seminar we can take the further questions from the members, and then balance from the Google sheet. So that way, if we follow, then the members present will get reply to their query. Isn't should we do that? What is your
You
view?
can do that, Niteshji. We can do that. In fact, that is the right approach, but the approach should be documented. If it is not
No.
documented, then the issue
Yeah,
which you
yeah,
had
yeah.
with your newsletter, it can again crop up. So let us start with what you have said. Gauravji, should we do that?
You are the chairpersons, both of you, whatever decide, I'm fine with it.
चलो जी करते हैं उसको. In fact, I think that is the right approach. Only that it should have been documented, and since this is a new initiative, we are evolving. So now Kamal Podarji, he says, is RCM applicable on foreign bank charges deducted by the foreign bank on inward remittances received by the Indian exporter from the foreign importer?
See, basically, what we are saying is that we are reimbursing those charges to the exporter, sorry, the foreign exporter. And the foreign exporter basically is paying that to his bank. So please understand and appreciate. The first thing is there is no privity between the Indian importer and the foreign exporter. Foreign bank, sorry, my humble apologies. So you are not paying bank charges to the bank. You are basically reimbursing those particular amounts to your importer or exporter who is outside India. And therefore, my dear brother, there is a additional or a new amount which you are paying in terms of this support for financial or banking services, which the person outside India has provided to you, for which you are paying him the amount. And therefore, in my humble opinion, the reverse charge should be paid to that particular transaction. You cannot claim any exemption, or for that matter, please do not consider this as a case of 13 subsection 8, because then that particular case, banking company transactions is only limited to the account holders. So in this particular case, simply section 13 subsection 2, which is of IGST, will determine the place of supply. And in those particular cases, the place of supply is the location of the recipient, which is in India. It will definitely therefore qualify as an import of service. and therefore fall prey to reverse charge under section 7 of section 7 read with section 5 subsection 3 and 4 of the IGST Act.
Yeah, I think I agreed. Only thing is that I think the issue which he has raised is he is an exporter, Indian exporter. He exports for say 100 rupees. The bank charges 1 rupee as its charges and pays 99 rupees to his account. So what he is asking is that 1 rupees which the bank deducts, that is actually a cost to him, and whether RCM would be applicable because the bank is a foreign bank. But yes,
My answer remains same.
agreement is the same. Yeah. Your answer is absolutely correct for this. Seen video not coming. Okay. GST on resale under construction flats as trading activity. GST on resale of under construction flats as trading activity. Okay, so what he is saying is that under construction flat, a purchaser purchases, and then while the flat is under construction, he sells it to another person. So whether GST would be applicable on this transaction?
In case of trading, you are not supplying the services of works contract to a third party. There is no privity of you supplying a constructed flat to the third party. It is merely the rights which you have procured in an immovable property which you are selling to a third party. Now, interestingly, what is covered in Schedule 3 is basically the sale of land and building, and not the other immovable properties, which basically include all the rights in emerging out of land and building. So my dear friend, there is a gray area as on date in this particular scenario. The normal or the layman perception is that, see, I have purchased a building, I am selling a building. That will be the first argument by anyone. If this is the argument, my humble opinion is no GST will be leviable. You are buying a building, you are selling a building. But in case if you read it, look it into a very thoughtful manner, you are not basically buying and selling a building as of now. The other way of looking at is you right now has a builder-buyer agreement where you have a right whereby the builder will provide you a constructed building at a later point in time. So that particular right has been transferred by you to a third party. And this particular right which you are selling, if there is no obligation which is there on the part of the seller towards the builder, this may qualify as a sale of an actionable claim, and still it will fall outside the ambit of GST via Schedule 3. If there are counter obligations, then in that particular case, it will not qualify as a actionable claim. In that case, my dear friend, the scenarios might differ. Why I'm putting that particular thing to you? Because there are companies which underwrite towers or other buildings. So they may be cautious about taking that position. Otherwise, a simple person who is buying and selling a flat, maybe a company which has invested in a flat and then selling it on during its construction only, may take a position that it is either the sale of building as such, or if it is a right, then it is an actionable claim, and therefore sale of actionable claim also will fall within the ambit of Schedule 3. Either ways, it will not be taxable under GST.
Absolutely. Bang on, Gauravji. I think the participant has been very well explained this, which can take you, I think, years to understand. And a lot of effort has been put in by the speaker, to answer this question, which he made such a simple answer. Great. Preeti says there is a company which is providing event services through an online portal. They have appointed vendors in every city, mostly unregistered, to provide these services on their behalf. Will they be treated as e-commerce operators, and what should be the rate of tax for GST?
See, e-commerce operator is a very specified terms when the services are provided through you. Meaning thereby you are a person who acts as an aggregator and the supplier is a person different from you. Now, in this particular case, if you are collecting the amount also, then you fall prey to section 52. Or for that matter, section 9, subsection 5, or for that matter, section 24 will trigger. But if it is only a web portal which allows people to come to you, book these services, and then you subcontract those services which will be provided to the ultimate consumer. In that particular case, my dear friend, you are not an e-commerce operator. The person who is providing services to the customer is acting in the capacity of a subcontractor. Privity to provide services is by you to the customer. In e-commerce operator, let me take a small example. In any of those particular services, their supplier will be having a privity with the customer and the e-commerce operator will be acting as an aggregator. So supplier is known to the buyer. For example, if you look at Amazon, the name of the supplier will be different from Amazon. So in those particular cases, it is an e-commerce operator. But in case you are merely acting through a website, that is not the case where you can call yourself an e-commerce operator. You are having the privity directly with your customer. So please take caution. What is your capacity where you are providing those particular services to your customer?
Yes. I think the capacity is a direct relationship that they
Correct.
are providing to the customer. So I think this they should not be considered as an e-commerce operator
Correct.
because it's a
Correct.
subcontractor who they have appointed. Right.
Correct, sir.
So Mr. Dheeraj Jhawar says we are getting money as sponsored research from anyway, but the ownership of the asset is given only after the end of the project if the agency permits. So we can take the input tax credit on this. Further, we issue GST invoice and deposit the GST to the government. Here the query is, do we need to show the sales? Show as sales in books since we get 20% commission, not entire money. But if we don't show in books entire money sales, it will not mismatch with filing annual return. Please guide.
Sir,
Have you understood this, Gauravji? I mean,
it is a bit complicated a scenario, but let me put it, Vivek, I'll try to put it in simple words, Vivekji. We have two kinds of contracts. See, somebody may be a sponsor to your research. So in those particular cases, you undertake the research and the person becomes just a beneficiary, a benevolent beneficiary to you. There is no supply in those particular cases because there is no quid pro quo. But in this particular case, the research which you are doing is deriving certain assets. Correct me. So the Dheerajji, if you are listening, you have to correct us. The assets and the outcome of the research will be given to that particular person who has sponsored you at the end of the project. In this particular case, my dear friend, you are not merely taking a research, you are basically working for somebody else for development of any kind of intellectual or intangible property. So in this particular case, the entire amount of the sponsorship will be considered as number one, it will be considered as a receipt for supply of services. Number two, you will also have to appreciate the assets which you have purchased at the beginning, which you will be transferring at the termination of that particular research. In the beginning, you will have to buy it in your own name, capitalize that in your books of accounts, take ITC, pay the output on the amount which you have received toward this particular supply of services from your sponsor, and output will be netted from the ITC which is taken on those particular assets. But at the end of the term or the research, the amount of assets, fixed assets, which whatever will be the residual amount, at what price you will be transferring, though you will not be getting anything new from them, but there will be a notional price which may be computed by way of section 17 subsection 3 read with rule 43, at which you will be transferring those particular assets to that particular sponsor. So please keep that particular thing in mind, that fixed assets, though are with you in the beginning, they are your property, because at the end of it, it is not the case where you will transfer if the assets are so-called left. So if an asset is destroyed, what will be the status of that? That is also a pertinent question to decide the nature of this particular transaction. So there are certain gaps which I see, but I hope the basic concept in terms of benevolent sponsorship and sponsorship for results, that is also given. Let me refer you in the education guide dated 28th of June 2017, 12, sorry. The same example has been given there in case of research companies. That was in context of service tax. But since the context is same, the laws are pari materia, and therefore that will be applicable in your GST also. So you have to pay the tax on that output amount. If those particular fixed assets are to be given to the third party in as various basis, the assets may be purchased in the third party name and may be used by you. Alternatively, it may be purchased by you and then transferred at the later part of this particular contract, last stage after the termination. These intricacies can only be answered if if one knows, which you might be knowing, what exactly are the terms of the contract between you and the sponsor.
Right. For me, I think this is very vague, and the facts have to be known to give a very specific reply. Nonetheless, Gauravji, you have explained various facets of this transaction. Okay, next is Ramesh Verma-ji, an unregistered company engaged in rental of property having a turnover of 10 lakh rupees, invests its surplus funds in gold bars, paying applicable GST of 3%. In the year 2020, total investment is say to the tune of 1 crore and showing the same under investment in its balance sheet. Now, when the company sells the entire gold bar, say for 1 crore 20 lakh rupees in the current year, is it required to obtain GST registration under GST and charge GST at 3% on such sale? The company has not availed input tax credit on purchase in the year 2020 as it was not registered.
Rameshji, it is a very simple question. You are disposing an asset, be it an investment, be it fixed assets, or be it your trading stock. Let us not confuse income tax with GST. Since it is a disposal of an asset, I am covering all categories, which is your fixed assets, your investments, or your trading assets. The total turnover will be taken as part of aggregating turnover in case of GST, and therefore you need to take registration, pay the tax on output, even though you have not taken the ITC, that will not debar. I'll also caution my dear friends, there are many companies which are holding securities in investment and they are trading in investments, and they may be doing their normal trading or manufacturing in taxable goods or services. So many of the friends might not be paying attention that those particular scripts which are there in the investment, they need to make a reversal under Rule 42 and 43 in respect of those particular exempted supplies of securities, because securities are neither goods nor services, and therefore they become a exempt supply. So please do take care of that particular thing. You need to make reversals, even though you are not having those particular assets as trading assets in your financials. So in your case also, sir, even though you have not taken ITC, please, that will not debar the payment of output tax on the sale of assets which are gold bars by you. Register, pay taxes.
Correct. I think that was the main issue, that he has not taken ITC. Now, possibly the queries issue is that if he has to pay output tax, why not take the input tax credit now? But I think that input tax credit is lapsed, it is time barred now. So
Vivekji,
you have to pay output tax.
Just for the benefit of the listeners, if ITC non-taking will become a reason for not paying the output, I think everybody sitting in the country will be happy to forego the ITC and not pay the output tax. Don't go for that kind of a pleading. Input is a concession. ALD Automotive, Honorable Supreme Court very clearly said, you want to take, that is a concession granted by the government. It is not a vested right till the right vests in you. And when it will be vest in you, when you fulfill the conditions of section 16. However, the output liability is always independent of ITC. So that differentiation, please keep in mind. That is a humble submission on my part to all the listeners.
Correct. Next, Roshan ji says, as per GST order, demand of tax is 1 lakh rupees, penalty 1 lakh rupees, and interest as applicable without mentioning amount of interest. But GST DRC 7 shows demand only of tax rupees 1 lakh rupees, whether demand is invalid as per rule 142.5.
See, if you're, so this is talking about a demand order only. Was the show cause notice having DRC 01 having the demand for all the three of it, or was it limited only you're talking about the order? This is something which I am not able to grasp from the question. So demand creation happens through DRC 07 on GSTN. If it is showing a demand of merely 1 lakh rupees, my dear friend, they cannot demand more than that. Number one. Number two, you're not spoken about the SCN, whether the SCN has also demanded everything. If the SCN has demanded, has not demanded the interest or for that matter penalty, the order cannot travel beyond the show cause notice. That's a trite law. So look into these two aspects. If they miss to mention in DRC 07, they cannot demand interest and penalty. I will not comment on whether the corrigendum can be issued, because again, there is a different set of rules for corrigendum. We have to take other things also into consideration. As of now, you don't have a demand of interest and penalty.
Yes, I think that is the question. Possibly he's missed. He said order instead of show cause. The show cause said tax 1 lakh, penalty 1 lakh, and interest applicable thereon. But order said 1 lakh rupees tax. That's it. So until unless a corrigendum etc. is issued, then this tax is the final demand.
We are seeing a lot of
invalid demand.
So we are looking at a lot of interesting demands which are being floated from different orders. The system which is on part of the authorities is also not so mature. So they are committing errors in terms of issuing demands. And what this gentleman is saying, this is possible. The detailed order will be there along with DRC 07. The officer missed in DRC 07, but the order contains. Order merely will not have an effect unless DRC 07 also contains that particular amount. So what we both are talking to this in this scenario, I think there is a lot of interesting orders which are coming up, and I'm also looking at a lot of interesting show cause notices which are coming up. So a lot of errors, my dear friend. My humble submission would be, if you are getting a show cause notice, do not look at it as an assessment. It is on a very specific point. Many of my practitioner friends are committing an error. They look at the show cause notice as a demand and they try to defend the demand without looking on the context under which that particular demand is raised. You may have an error, but the question is not that error. The question is the allegation in the show cause which has been raised by the officer. Look into it. Honorable Supreme Court, Vrindavan Beverages. Order cannot travel beyond the show cause notice. Show cause notice is the foundation of the proceedings. Keep those particular fundamentals in mind, and I can tell you the results will be very, very different.
Right. Okay, I think last question, given the time constraints till 5 o'clock, we have to wrap it up. So Mr. Bagadia says an ongoing proprietorship concern is taken over by a private limited company on 1st January 22. The proprietor is not a director of the company so formed. All assets and liabilities are transferred as on 31st of December 2021 to the company, and the capital balance of the proprietor is transferred as the current liability. GST number is already obtained by the company on 25th of November 21 on voluntary basis. No information is yet provided by the company to the GST department regarding such takeover. ITC-2 is not yet filed for transfer of ITC. What are the compliances to be done by the company and how the ITC will be transferred to the credit ledger of the company? What are the compliances to be done?
Sir, I think the first thing which you should have done, when you are taking a number which is in respect of a takeover of a business, the number is not a voluntary number. It is a mandatory number in the section 24. And therefore, in those particular cases, you should, while taking the registration, you should mention that this particular registration is a mandatory registration and it is on account of transfer of a business. So in those particular cases, section 85 of CGST Act will also trigger the liabilities in case of transfer of business. Please do keep that in mind. You are inheriting all the problems of the transferor along with the transfer of business. So number one, you should intimate that you are a transferee. You should intimate the two GST numbers which are there in terms of transferor and transferee. Number three, in terms of ITC-02, I have my serious doubts because allow me, I am not doing any compliances, but I hope that was within 30 days that you were supposed to file that form. If that particular form is not filed within 30 days, now there will be a lot of challenge in terms of limitation that the courts may not agree that why you have not transferred that particular balance to your company. But having said so, quoting section 85 and taking shelter of Siddhartha Enterprises, Gujarat High Court, you can go, you can go to the department and say that, see, I have taken over a business and that particular business had a balance of ITC, which was a property. And therefore, that particular property is a vested right because that particular ITC was equivalent to a transitional credit, if you remember. So transitional credit also people were not able to comply. And therefore, you can take shelter of Siddhartha Enterprises. But yes, you need to give a good reason why this particular compliance was not made. My dear friends, things have changed. Courts in recent times, if you look at the various judgments, they are not giving you a benevolence for defaults. But yes, if there is a vested right, there is a procedural lapse, you can definitely go and you will definitely find a respite in the court. So make your case very clear. The reason for not filing the ITC-02 in time, there is no other compliance which you need to do. I would also put a word of caution, since it is a case of transfer of business, there is also liability under the Stamps Act. So there is a agreement which you should have made in terms of transfer of business. If you have made that particular agreement, that will be resulting in a deed of conveyance. And since a deed of conveyance for transfer of business is in place, stamp duty will also trigger. Keep those things in mind, and no other compliances in part of GST, sir.
Yeah, only that the time limit for filing of ITC-02, I think from proprietorship to companies, possibly there could be something else. But I think for companies merger under 87, there is no time limit for ITC-02. As far as I'm, because mergers I have done, but proprietorship to companies.
I'm not doing compliance or timelines, please. I have already put my disclaimer on that. So what Vivekji is saying is also positive for you. Please check the timelines.
Please check that.
The time may be open for you.
Absolutely. And right, so I think we are almost at 5 o'clock, which I think was the time for the GST portion. So Gauravji, anything else? And just closing comments and closing remarks. You see, GST law yesterday, day before yesterday, this special drive has been, Instruction 1/2023 has been issued for this special drive for fake registration and fake input tax credit. Now, this is very interesting. I think this is for the first time after refunds to some extent, where state and center, plus state and state, they are all acting in unison against this ITC, fake ITC and fake registration. In fact, I had always, advice and suggestion to the commissioners that is some suppliers, their GST number is active in one state, not active in another state. I said, why don't you go and collect from the other state? So now I think with this instruction 2023 that has started, but one important thing is that the genuine taxpayers, many times they make errors, procedural errors, that place of business, they take virtual place of business, एक table space में, there are multiple companies registered, and place of business transferred, still showing in the GST portal, so many other things. One important thing is that, transfer of ITC, especially in case of services, without transfer, without an actual supply. People think, अच्छा यहाँ दे रहे हैं, यहाँ से bill issue कर रहे हैं, वहाँ credit ले रहा है, tax pay कर रहा है. These are some important things which one should take care. Gaurav ji has handled, I am sure, many such cases. So Gaurav ji, closing remarks from you on this instruction.
See, prior to this particular instruction, there is also another set of instruction which were basically talking about the automation of the processing of returns. So Vivekji, what the intent is, now your processing of returns will also be automated. The notices which will be generated by the systems will start flowing in another 2 months or so. And those will be numerous. Now, when your return processing has been automated, there is something which the officers also need to do. The recent instruction is basically targeting the fake firms registration, which may result in plugging the ITC, which is fake. So in coming days, my friends can find a lot of ground level surveys from the officers, since they have also been they have been relieved from the work of processing of the returns. So in coming days, a lot of action, ground action in terms of normal officers, the superintendents and the inspectors visiting your premises, you might find that in place. A lot of notices in terms of cancellation when the proprietor or the partner or the director not being found at the premises will again start flowing to a lot of assessees. So my dear friends, my humble suggestion would be that whatever your premises is, number one, put a proper nameplate. Number two, the GST number, the phone number also of the concerned person should also be mentioned on that particular premises. So even if the premises is closed, the premises must have a contact number of the person who can be contacted in the requisite time. Number two, keep a tab on your GST portal in terms of any notices of cancellation which might flow to you, because again, revocation is a tedious exercise. And number three, you may, in case you have multiple registrations, which Vivekji just mentioned, beautiful point, kindly get your registration certificate updated. You cannot live in an era where you are keeping your compliances pending, or in terms of your registrations which are not updated. Very recently, if you look into the e-way decisions of the Honorable High Courts, even if it is a fault of the transporter, even if it is a fault of the authorities, that in such particular cases, even though it is a fault of the respondent, the petitioner was having a facility to extend the timeline of e-way bill. The respite was not given to the petitioner. So at least, I'm saying, the battle may be there, but at least your compliance portion should be completed. So with these words, Vivekji, I'll try to close on the closing remark. Thank you, sir.
Thank you. Thank you, Gaurav ji. Over to Pallavi.
Yes, Pallavi.
हाँ जी सर. हेलो.
हाँ Pallavi.
हाँ सर.
Vote of thanks to the moderator and the speakers.
Thank you so much, Vivek ji and Gaurav Gupta ji, for your precious time. It was a wonderful GST helpdesk session. I think lot of queries has been cleared of the participants who has joined the seminar, and also the Excel which has been sent by the people for the queries. Once again, I would like to thank Gaurav Gupta ji and Vivek Jalan ji for.
Vivek ji, thank you so much. Thank you so much for
sir.
joining today.
Niteshji, Niteshji,
Yeah.
thank you. Thank you for inviting me. I was actually honored to be a part of this session. Thank you, sir.
Thank you so much.
Thank you so much, sir.
Thank you very much, Pallavi ji, for this particular session of Views Exchange. And on behalf of Views Exchange, I welcome our learned help desk speaker, guest speakers all along from Delhi, Dr. Rakesh Gupta. Welcome, Dr. Rakesh Gupta, in the help desk platform of Views Exchange. I welcome CA SS Gupta ji from Kolkata in the help desk platform of Views Exchange. And I also welcome CA Ramesh ji Patodia, now Advocate Ramesh ji Patodia, in the help desk platform of Views Exchange. On behalf of Views Exchange, we welcome all three of you in this platform, and this is a very noble idea on by the Views Exchange, and we really appreciate the kind of idea and the format which is being used by the organizers. So thanks, convener Nitish ji, for this opportunity. Before we start taking the queries from the audience, let me introduce our guest help desk speakers today. Dr. Rakesh Gupta. Dr. Rakesh Gupta is a merit positions holder in high school and intermediates, graduated from St. John's College, Agra in 1980 and secured first rank in the university. He is an FCA, FCS, AICWA, MBA, LLB, first rank in university, LLM and PhD. He was appointed member in ITAT at the age of 37 years, posted at Hyderabad, but resigned later on. And he has co-authored many books along with his partner, Dr. Raj Agarwal, Search and Seizure Assessment of Search Cases, Taxation in Real Estate Developers and Joint Development Arrangements. So his profile run into 3 pages. I'm just cutting it short with the permission and with some things. Welcome, Dr. Gupta, and I request all of our audience to please put your hands together in this virtual platform. Our second learned speaker today, learned guest helpdesk speaker today is CASS Gupta. And for Kolkata audience, everybody is aware of CASS Gupta. Even Dr. Rakesh Gupta is also fully conversant in Calcutta audience. So CASS Gupta, Santi Swarupji Gupta has acquired CA qualification at the age of in the 1973 at an early age of 19. Securing first rank in Eastern region in CA final examination, and he was worked as a vice president in AB Birla Group. He has represented cases in various tribunals across the country: Kolkata, Delhi, Bangalore, Allahabad, Patna, Cuttack, and Guwahati benches. And owing to his expertise and experience, he is a regular speaker in various seminars and symposia organized by various industry bodies. He is also a member of many professional organizations, including Merchant Chamber of Commerce, Calcutta. With this brief introduction, we welcome CASS Gupta ji. Please put your hands together to CASS Gupta ji. Our next help desk expert speaker is CA and advocate Ramesh ji Patodia. Ramesh Patodia ji is an advocate and chartered accountant and is continuous practice in Kolkata for last 36 years and has been practicing mainly in consultancy and litigation in the field of direct and indirect taxes. He is a regular speaker at several professional organizations, and he has authored many books on professional topics, including HUF, Complete Guide to Reassessment under Section 148, Commentary on Direct Tax Vivad Se Viswas, Commentary on Section 80IA of the IT Act. He is also a trustee of Sri Rani Satish Ji Mandir, Jhunjhunu, and Gayatri Foundation, Kolkata. Please welcome CA Ramesh ji Patodia. I request all the audience here, so please put your hands together for CA Ramesh ji Patodia. Nitish ji wanted to say something.
I think we should start. We should continue. We can take questions from the audience first. That is my humble request, because those who have joined, joined right now, their questions should be replied first. So humble request, you take please take questions from the chat box as well as from the members. Then we will take questions what we got from the Google. That is my humble request.
Okay.
Because
Thank
three
you.
of the experts, authors we are having. The
Three
veterans
of the
profession.
eminent direct tax experts in the country, they are actually taking the question. So it is our privilege. The audience, I'll tell you, we are privileged to have the most experts in the country on direct taxes. So I'll start with the first question from the audience as suggested by our convener. The first question is from Amit Surana. Sir, is an NRI required to file return? An NRI is required to file return in India if its monthly income of 1.26 lakhs through free launch or in Indian bank account. I believe this is the question, whether an NRI is required to file return in India if its monthly income of 1.26 lakh through free launch in Indian bank account. So this was the first question. Ramesh ji,
I think Amit ji, if you are there, you can clarify your
Yes.
question. I think there is some points missing.
Amit Surana ji,
you
if
can
you are there,
unmute.
kindly raise your hands. We'll unmute you. Amit ji, you are not visible. You have put in your question in the chat box, but you are not visible. Could you please raise your hands? If you will raise your hands, so we'll be able to see you and then we'll unmute you. Amit ji to dikh nahi rahe hain.
I think if anybody have question, request you to kindly raise your hand or write your question in the chat box.
Hello.
Otherwise, we will start from the.
Yes, Amit ji, you're unmuted. Kindly raise your question.
So my question is that my some income is in Indian bank account, that is through freelance service.
Pre-launch service.
Yes.
Freelancing.
Freelancing. Your client is a freelancer, right? Okay.
So whether it is freelancing or anything, it is an income, and going by the quantum which you have said, 1.26 lakhs per month, which is
Yes.
more than 15 lakhs per annum. I think you are required to file your return in India.
Okay. Thank you.
Next question is from Sunil Sharma ji. Query on income tax. There was a technical breach in uploading the form number 10B/10BB in the case of couple of trust institutions. The ITR was uploaded within couple of days of uploading form number 10. Now CP is treating it as non-compliance of mandatory time gap of 1 month uploading form and filing ITR. CPC has taxed total receipts and raised huge demand. Other than appeal, what solutions are available? Gupta sir, will you be able to take this question?
Yeah.
Okay.
So see, there is a CBDT circular number 10 that permits you to file this form number 10B or 10BB belatedly. So taking the help of that circular, I think an appeal can be filed, and there are several decisions wherein it has been held that filing of form 10B is directory and not mandatory. So therefore, even if it is filed with the explanation for, and as already stated in the query that they have furnished it, but it was not due to some technical reasons, it could not be taken care of by CPC, and therefore that has been done. So I think an appeal can be filed, and citing that circular and the relevant decisions wherein it has been held that this requirement is directory and not mandatory, I think the case can be argued and taken up.
Gupta ji, the querist is said ki other than appeal, what solutions are available?
Other than appeal, the remedy available is to go under 264 before the commissioner, and the only thing is, in case of an appeal, if you don't succeed, you have the facility of going to second appeal before the honorable tribunal. But if you go into 264 and if you don't succeed there, then the only remedy available is to go before the jurisdictional high court. There is that is the difference.
Okay, thank you, sir. Sir, the next question is from Mr. Ajay Kumar Bagadia. He's asking, an ongoing proprietorship concern is taken over by a private limited company as on 1st of January 2022. The proprietor is not a director of the company so formed. The proprietor is not a director in the company, new company. All the assets and liabilities are transferred as on 31st December 21. Last day of the year, 31st December 21, all the assets and liability was transferred to the company, and the capital balance of the proprietor is transferred as a current liability. No information is provided by the company to the income tax department regarding such takeover. I repeat, no information is shared with the income tax department regarding such takeover of proprietorship firm by a private limited company. What are the compliances to be done by the company with regard to such takeover? Dr. Rakesh Gupta ji, if you can
Yes.
throw some light on this.
Yes. So the conditions, if it is tax neutral, compliances of section 47 have been made, then this transfer will be tax neutral. And insofar as the information being shared with the tax department is concerned, there is no such obligation under the Income Tax Act for such company to share this kind of information. In any case, that company would file its return, and then during the normal scrutiny assessment, assessing officer would come to know there will be additions, and then assessing officer would come to know and then would ask whether this transfer is tax neutral as per the provision section 47. And that is how. But then there is no such special requirement of communicating to the tax department.
Okay, thank you, sir. But if you permit me, this latest Supreme Court judgment in the case of this amalgamation mergers, where they wanted that the company should give an information relating to that reassessment cases.
That is in different context. That is so far as company is concerned, discontinuance of the business by an SSE, that is required under section 176, but then that will be applicable in case of the proprietorship concern, not in case of a company.
Okay, sir. Thank you, sir. Sir, another question from a partnership firm, real estate developer, wants to sell the unsold shop after getting conversion 2 years back, CC, and after getting conversion certificate 2 years back. Due to low demand, the firm is sold at a very low price of rupees 5 lakhs, whereas the stamp duty value is 9.5 lakhs. Any way to avoid this sale consideration of 9.5 lakhs? The sale consideration is 5 lakhs at a low price. Stamp duty value is
43 CA now would come in the way, but then there is one escape route that if he makes a request to the assessing officer to appoint a district valuation officer, and if he is in a position to establish and substantiate that the fair market value is 5 lakhs and not 9.5 lakhs, then it's all right.
Okay, sir. Thank you. Sir, next question is from Mr. Sasank Goel, and he is asking, assessment under section 144 was completed and the SSC did not submit any reply to notices due to ignorance / misguidance. Now, what grounds can be taken up in the appeal? Should it be only opportunity of being heard, or the detailed grounds pertaining to the assessment to be filed in the form number 35? Gupta ji, SS Gupta ji.
Well, I for one would suggest that he should take both the things, also the ground of opportunity not being provided and also the grounds on merit, that if the assessment has been done at a
His frame is frozen.
There may be some connectivity issue.
Yes. So now I'll complete it.
Please, sir.
Very rightly said, Gupta sir. Sir, Gupta sir now has come. Okay, sir, you became inaudible in between.
कोई connectivity की issue रही होगी आपके end में sir, तो एक बार को दोबारा ले लें.
Repeat it, sir.
Am I audible?
No, yes.
Now you are audible, sir. Perfectly audible.
What I am suggesting, that the SSC should take both the grounds of not a proper opportunity being provided. He should also explain as to under what circumstances he could not comply with the notices, and also he should also take, without prejudice to the legality of these grounds, he should also dwell upon the merits of the case, so that in the event of these grounds not being sustained, at least the grounds of, because any assessment under 144 also, should be done on a fair and reasonable basis, on a comparable basis, on a transparent basis. So therefore, both the issues, both the grounds should be taken.
Okay, sir. Thank you, sir. So the next question is from Mr. Santosh Sabat, and I would request Ramesh ji kindly take this question. The SSC Society has got provisional order registration under section 12 capital AB on account of opting the section 12A1 AC 6 Roman 6 instead of 12A1 AC Roman 1. Currently, the CIT rejected the final registration on the ground of earlier provisional registration. Is it the valid ground of rejection? How to get the relief? Ramesh ji, is the question clear to
Can
you?
you please?
It is
No,
in
no,
the chat
please,
box.
please.
It is in the chat box. Santosh Sabat, he is asking, the SSC Society has got provisional order of registration under section 12 capital AB on account of opting the section 12 capital A clause 1 clause AC Roman 6 instead of 12 capital A1 AC Roman 1. Currently, the CIT rejected the final registration on the ground of earlier provisional registration. Provisional registration में दूसरी section थी 6 थी Roman 6, अभी जो आया Roman 1 आया. So currently the CIT rejected the final registration on the ground of earlier provisional registration. Is it the valid ground of rejection? And what is the remedial action for the SSC?
I think, yeah, a lot of people are facing situation like this. They applied under wrong subsection and they were granted also because as it has been said in the budget also that everything was automated and the computer in fact was giving all these approvals. So there was no opportunity for any physical scrutiny. And in this Finance Act 22, I think in this act, finance bill only, it was said that if you have given any false information while filing your this renewal application, then you will be liable. In the situation which you have just now spoken, in my opinion, it is better to go in a writ court and highlight the difficulties that the procedure that came new, and highlighting all those before a writ court, it will be easier to get a quick determination rather than going through the regular route of either trying to get this under section 264 or whether appeal can be filed against this. I'm not very sure that how this will be appealable. But
Dr.
I think
Akhil Gupta ji, any other Sasta Sundar Tikau option?
No, appeal, in my respectful submission, was lied before the tribunal, because this amendment has been made a couple of years back that any order passed under section 12AB or for that matter under the erstwhile section 12AA3 now became appealable before the tribunal.
Okay, thank you, sir. So the next question is from Mr. Ramesh Marma. A charitable trust registered under section 12AA, 12AB have received donations of rupees just 20,000 rupees, and the trust has spent 18,000 on admin expenses. So net total income is rupees 22,000 only. No deduction is required to be claimed under section 11. Is it mandatory to file return by such charitable trust under section 139(1) or 139(4)(a)? SS Gupta ji, आप बताइए.
Well, since the income received is, the gross income received is below the maximum liable for exemption, I think there is no requirement to file the return in this case.
Okay, thank you. Thank you very much, sir. Shashank Goel and SSC did not file return under section 139, nor in reply to notice under section 148. Now assessment is made under section 144. And SSC wants to pay tax on such escaped income, e.g. capital gain generated. Can return be filed now? And if not, can tax be paid and penalty relief be claimed during appeal proceedings? The main question roving around the 270A capital A penalty, whether he can get a relief or not, even after payment of taxes.
No.
What is the assessment here?
Assessment here he has not written, sir. So 271(1)(c) you are be interested in hearing? Assessment likha nahi hai, sir. Can you, Shashank Goel ji, if you are here,
it has come assessment year 18-19.
Okay.
AY 18-19. So Gupta ji, you want to add anything, sir?
Sorry, Gupta.
बोलिए राकेश साहब, आप बोलिए
Sir, it will constitute underreported income and then is liable to pay penalty 270 capital A, and that too at the rate of 200%. There is no such provision which would enable now him to file return and come with clean breast. I mean, there is no such provision.
So there are no more questions in chat box, sir. So if the organizers will allow, we will take the questions from the Excel sheet. So I am coming straight to the Excel sheet. This Excel sheet was circulated. Dr. Saab, आपके पास में भी होगी, Gupta जी आपके पास
Yeah,
में
है मेरे पास में.
Yeah. So I am taking there are 15 questions in the Excel sheet. So I am taking the first question. Now the another question come in the chat box, Santosh Sabat. No, it is Mr. Sabat will take this question later on. Now we'll be taking up the Excel sheet. In the case of payment of profit-linked compensation to whole-time director or ED, provision is made in accounts on finalization by which time TDS return and even director's IT return stands filed. Whether TDS can be deducted in the next year when the figures are determined and income be offered by the recipient in the next year, and in such case whether expenses shall be allowed to company in previous year although no TDS has been deducted in that year. Even if provision of section 40A IAA is considered to claim expenses in the hands of the company by paying TDS within due date of filing return, whether the year of inclusion of such income in director's hands in subsequent year shall be correct. This is the question actually. So Dr. Rakesh Gupta, I think you have heard this question, the second page, first question, second page.
Yes. But in fact, the manner in which these questions were sent, so it is very difficult to find which is second page of, but then I discovered this query. So when the profit linked commission is to be paid to the whole-time director, then this would constitute income under that salary. And in case of income under that salary, the section 192 says that the tax is to be deducted at the time of payment. And in any case, even if it is not taken as income under that salaries, then the point of crystallization of this liability or accrual of the income in the hands of the whole-time director can be taken to be when the things are ascertained, and which, as per the facts given in this query, now happen in the next year.
Right.
So the year in which the tax is to be deducted, should be deducted, or to be deducted, or can be deducted is the next year. And what is the other question?
Even if provisions of section 40A is considered to claim expenses in the hands of the company by paying TDS within the due date, whether the year of inclusion of such income in director's hands is in subsequent years shall be correct.
So we'll have to assume that if it is a income under that salary in the hands of the whole-time director, then the tax has to be deducted by the company at the time of payment. So in any case, this will be allowable to the company when it comes to the allowability in the hands of the company is on the basis of accrual. And accrual is determined, since it is a profit linked commission, profit can be ascertained only after the end of the year, then it can constitute income of this company for the next year. And therefore, whether 40A IA for this year or the year gone by would not apply according to me. So it will be allowed as an expenditure and hence company in the next year.
Amit ji, is this question being raised by you? You have written something in the chat box, sir. Salary paid to whole-time director fall under section 192 or 194J. Amit Surana ji, you have written something in the chat box. Is this question pertains to you?
Yes, that probably must be his question.
Amit Surana ji, kindly unmute yourself and ask the question from the sir directly.
Sir, SS Gupta sir wants to say something.
Gupta sir, SS Gupta ji.
Yeah, देखिए, I mean, sir has already explained the major things, but I would like to add something with the permission of Dr. Gupta.
No, sir, definitely, sir. Let us have the benefit of your experience.
See, so far as if it is considered as salary, it has to be assumed as income of the year in which it is to which it relates. If it constitute as income under business or under other sources, then it will constitute income of the subsequent year only when it crystallizes, because the right to receive of the by the concerned employee or concerned director will arise only on quantification and crystallization in the subsequent year. So an allowability in the hands of the company can be taken on accrual basis in the earlier year also, because it relates to that year, even though it has been quantified and ascertained in the subsequent year. I think that can be done.
Thank you, sir. Ramesh Patodia ji, there is a question from Neha Tyagi on the chat box. This is what is the process of getting exemption under section 10 within bracket 46A, 10 clause 46A of the Act by development authorities?
And 46A.
10 within bracket 46A.
Then 46A, I think it has to be Central Board of Direct Access.
Is Nagar Nigam required to file ITR as per Rule 12AB? This is the second question.
Nagar Nigam.
Nagar Nigam. Income
Nagar Nigam.
And see the writing, income of Nagar Nigam is exempt under section 10 clause 20 of the Act. 10 subsection 20 of the Act.
Nagar Nigam, I think corporation basically. So I don't think it is required. Article 243 of the Constitution of India also. It won't be required, I think, to file the return. If it is corporation, Nagar Nigam, as it is understood. Article. No, in my opinion, no.
Okay. Sir, Tayab Ali is asking a question. SSC got 148 notice on 16th of April, 16th April 21. After Ashish Agrawal Supreme Court judgment, all 148 notices deemed to be 148 capital A. But Supreme Court allows safeguard section 149. In our case, according to section 149 for the AY 1516, the AO can only open the scrutiny if the escapement of income is more than 50 lakhs. In this case, we replied to that as per section 148, the escapement is only 46.6 lakhs capital gain on property. So out of scrutiny, but the AO did not listen to us and passed an order 148 AD on the ground that SSC did not file evidence of capital gain. We challenged the order in Delhi High Court. Honorable Delhi High Court remanded back the case and allowed us to file evidences of capital gain 46.67 lakhs. AO again sent 148 AB so-called notice with some extra queries more than previous 148 notice. This is all to bring us in the escapement of income more than 50 lakhs. We replied all the queries of AO with filing of all the evidences and asked, this is a pretty big question. What is the end? What is the solution and where should I fight my case at AO or directly to appeal to ITAT? This is a pretty big question. Like Delhi High Court has remanded back the case to the SSC's court, AO's court actually.
At this stage, may I reply?
Yes, sir, please.
At this stage, when 148 AD order is passed the second round by the assessing officer, at this stage, you don't have any right to appeal. At best, you can go in for a writ again. And one of the ground and defenses which can be there, that since the genesis of these proceedings is the original 148 AB, where that quantified income which could be said to have escaped was not more than 50 lakhs of rupees. So on remand by High Court, he probably could not have improved his case and could not have introduced or infused some more items. I mean, so that the limit of 50 lakhs is crossed. So all these things, I mean, can be made out. But rest assured, at this stage, you don't have any right of appeal.
Tayab Ali ji, I believe your query must have been answered very satisfactorily. Next question is from Mr. Rajesh Verma, and he is asking for the time limit. What is the time limit for the reopening under section 148 for AY 1617? Is it 1617 time barred on 31st of March 2023?
Yes. Yes.
So Rajesh ji, yes, as per the experts, 148 AY 1670 is time barred as on 31st of March 2023. So now again, we will be moving over to our query sheet. The next query is in updated return of charitable trust. If income say rupees 1 lakhs received but not applied at all. Whether form number 10 and 9A can be filed along with the updated return. Ramesh P. Patodia, kindly answer this question.
No, I don't think that form number 10 and 9A can be filed with the updated return. The time limit for filing these forms are well prescribed. Even otherwise, updated return cannot be filed for any benefit. That it must result in some taxation. So if you are trying to take benefit of getting this filing form 10 and 9A, I don't think you can do that.
So the next question is question number 3 to SS Gupta ji. LLP filed ITR claiming 80 IAC deduction for first time due to technical error, tax liability under AMT not calculated. Whether updated return can be filed along with form number 29C and form 10 CCB.
Well, since the SSC wants to file an updated return, this can be done. And this filing of 29C and 10 CCB, though it may not be along with the return under section 139A(q), can be supplemented by sending by email or by speed post to the concerned authorities. So the question is that 80 IC has been claimed, but the relevant forms have not been submitted.
Right, sir.
So therefore, in this case, an AMT has not been calculated. So therefore, updated return can be filed by making the payment of the tax and submission of these forms.
Okay,
that
sir.
can be done.
Thank you, sir. So the question number 4 to Dr. Rakesh Gupta. Can an updated return be filed if the tax liability in an updated return and earlier return is the same?
The answer to this question is quite tricky. If we read the main section, now there is no bar. Even in such kind of a situation, because the bars are that if it reduces the tax liability, if it reduces the refund, if it increases the situations which have been envisaged, let me read it, 139(8)(a). So technically there is no bar. But then as Patodia ji says that the objective of 139(8)(a) is to yield additional tax. But if you read main section, substantive section 139(8)(a), now there is no such mandate that there has to be tax. Though if we read 139(8)(a), let me read it. 139(8)(a). Now it should not be a return of loss if it has the effect of decreasing the total tax liability determined on the basis of return furnished under subsection 1 or subsection 4 or subsection 5, or if it results in refund or increases the refund, then there is a bar. Now this situation when the tax liability remains the same, now it has not been kept as a disability under 139(8)(a). But then if we can infer from the purport and object of section 139(8)(a) and section 140(b), which says that in case it is filed after a year, then there has to be incremental tax of 25%, or if it's after filed after 2 years, then it has to 50%. So having regard to that purport and object, this situation may not be covered, but then this is quite a tricky situation.
Okay. Thanks, sir. Thanks for enlightening. SS Gupta, sir, this question is to you. During the course of search in the case of ABC Private Limited in the month of December 2019, one of the directors accepted that ABC Private Limited is a bogus shell company. In a statement of director recorded under section 131 of the Act on 6th December 2019, the director gave list of beneficiaries to whom accommodation entry was provided. In the list, it is seen that ABC Private Limited had made investment in the SSC company and was allotted shares of the SSC company during the AY 17-18 itself. The DCIT has shared this information to the ITO of the SSC company for taking necessary action on 15th March 2020. Whether this sharing of information is a satisfaction of the assessing officer that information contained therein relates to other person. Information contains related to other person. Second question is, since search was initiated in December 2019, whether 148 notice can be issued after 1/4/2021 to the SSC? Can SSC go to writ petition on this ground? Whether proceedings under 153C will apply? There are three questions, but all, sir.
So the first question is whether the sharing of information is satisfaction on the part of the assessing officer of the third person receiving entity.
Right, sir.
So only the information or material which flows from the searched assessing officer of the search person to the assessing officer of the third person. Then only that receiving of information cannot and should not constitute satisfaction on the part of the assessing officer of the receiving entity, because he has to analyze that information, link it with the his assessee's records, or make inquiries or conduct some thereafter he should record his satisfaction. Merely as soon as I received certain information should not lead to satisfaction. That is one. Second question is, since search was initiated in December 19, whether 148 notice can be issued on or after 1421 to the SSE. Sir, the facts are that in the financial year 17-18, there were shares were allotted by that company, investment was made. So for 17-18, even if we go by first proviso of section 149, the 6-year time limit goes up to 31st March 24. Therefore, there is no restriction for issuing of 148 notice even after this 1421. Can SSE go for writ petition on this ground? Where is the, I mean, I fail to understand what is the ground that if the search has taken place in December 19, and if 148 notice is coming on 1421, why the department has very much, if it is within the limitation time limit permitted, and if it constitutes information as per section 147 and 148, there is no reason, there is no, I mean, on what ground you will go under writ proceedings. Whether proceedings under section 153C will apply very much, because it is an assessment of an entity other than the search person. So 153C will apply.
Will apply. Thank you, sir. Thank you. Next question is to CA Rameshji Patodia. Patodia, sir.
Yes,
Ramesh
sir.
Bhaiya, and 100% government organization registered under section 12AA and 80G.
Yeah, Anupji, I have seen that question.
Yes.
To save the time.
Yes, sir.
I think the only remedy will be to make an application to CBDT under 119(2)(b).
Okay.
Otherwise, ACIT, so there is no question. CCIT and all has been given power to condone the delay. But in this case, when the law prescribes a particular date for filing of the return, which date is now expired, so now either you have to file updated return or you have to make an application under 119(2)(b).
Okay.
In my opinion.
Thank you. Thank you. Dr. Gupta, sir, I am taking the last question first. Question number 14. An industry association is in the legal form of Section 8 company.
Where is that? Where is that? I'm sorry.
It is question number 14. The penultimate para. Penultimate para. Last but one para. Page number 3, last but one.
They are in very. Okay. Oh, please. Yes.
Last but one.
Yes.
An industry association in the legal form of a Section 8 company having Section 12A registration as a registered trust engaged in development of industrial park for its members by way of buying undeveloped land from farmers and eventually developing and allotting the same to its members only. Can this charitable trust allot surplus land to its members at cost price, whereas the market value of the land is much higher? Cost price of the land is much lower because of the continuous buying of the land and eventual increase in prices of the land in the area due to spurt in the industrial activities.
Yes. So first of all, if this association, as the facts given, is registered under Section 12A, then the normal computational provisions of any other head, they would not be applicable. And possible question in the mind of the querist whether Section 50C would apply, then I may say that that section would not apply. Then in the hands of the recipient, now whether Section 56 subsection 2 clause 10 would apply or not, no, that will also not apply, even if he has received it as lesser than the fair market value, because there is one proviso in which an exception has been carved out that any property received by a person from a registered trust, now that will not constitute income. So allotment of land at cost or lesser price than the market value now will not have any tax implications either for this association or for the recipient.
Okay, thank you so
Gupta
much.
sir, Gupta sir wants to add something.
Gupta sir.
So with great respect, sir, the SSC should have considered making it a mutual benefit society, because the only action of the in the concerned facts of the case is that it is a group of 5-10 persons who are forming an institution and getting it registered under 12A, but and then they are buying lands and giving it to only to those members only, to no one else. So far as if it is a mutual benefit society on the principles of mutuality, if they do the things, I think there should not be any issue here.
But sir, the facts which have been given is that association has been registered by the tax department.
That is what,
under section 12A. So long as 12AA is in force, then what is the implication of tax in the hands of the association and in the hands of the recipient? That probably is the question.
Yes,
sir, I appreciate, sir. What you have stated is with that 12A registration background. What I was suggesting, the facts say that
there is no need for
they are giving to themselves. So if it is a mutual benefit society, the matter ends. There is no problem in there.
SS Gupta ji, this next question number 15 is, I am addressing it to you, sir. Okay. An industry association in the legal form of a society registered with Societies Act West Bengal, having section 12A and 80G registration both as a registered trust, engaged in training, educating, awarding diploma and imparting knowledge and education about that industry specific product development and growth, having income receipts from members in the form of annual subscription, fees, interest on fixed deposit receipts, and also from advertisement and sponsorship on account of its annual industrial fair come exhibition held every year in various parts of the country, different cities of India. This is held only once in a year. This means industrial fair is held only once in a year and generates surplus for the society for its entire year activities for its all the branches situated across India. Whether Supreme Court judgment of Ahmedabad Urban Development Authority dated 19th of October on GPU will be applicable on this trust and its income receipts on the account of sponsorship, public advertisement on the occasion of annual industrial trade fair will still be treated as a charitable purpose or not?
Well, so the definition of charitable objects as given in 215 is very much applicable, and it will the act which is being done will constitute a GPU object of this
general public utility.
General public utility, no doubt about that. But after this decision of the Ahmedabad Urban, now there is a according to me, there will be a practical problem that the Ahmedabad Urban specifically state it is the assessing officer who will every year will determine whether the benefits which are being provided are on a cost basis or cost plus normal above. So what will constitute cost, what will constitute normal profit, all that has to be considered year after year by the assessing authorities. Or then the question that the limitation which is given in 215 that this receipts from these activities should not exceed more than 20% of the total receipts of the institution. So that also has to be kept in mind. And the conditions as required by 11(4)(a) and 7th proviso to 1023C of maintenance of separate books of accounts, that will also have to be fulfilled. So in addition to the normal provisions, now the conditions which have been laid down or by this Honorable Supreme Court decision in Ahmedabad Urban will also have to be kept in mind in order to avail the benefit of exemption here.
Okay. Thank you so much, sir. Nitish Morji, do we have time, because you have allowed us to go up to 4:45, 5:45. So if I will allow, I can take one question from the chat box. CA Rajiv Jha is asking, in assessment year 11-12, depreciation has not been shown in depreciation schedule. in assessment year 11-12, depreciation has not been shown in depreciation schedule, but shown in the profit and loss account. The revised return has been filed within 4 years from the end of the assessment year. What is the remedy? Because initially the tax is added due to depreciation is not showing. What is the remedy? This is the question from Rajiv Jha. Patodia ji, will you be able to take up this question? Or
No, I have not understood the question properly. Please explain.
Rajiv Jha, you are here, so you can raise this question directly from our experts. Rajiv ji, are you here?
Yes, sir.
Okay. Could you please ask your question directly?
May I explain, sir?
Please, sir, please.
So the question is that in assessment year 11-12, depreciation was not shown in the computation of income, but it was there in the profit and loss account. And the revised return has been filed within 4 years. Now this is irrelevant because the revised return cannot be filed. I mean that belatedly. This is no revised return in the eyes of law. But be that as it may, now what is the remedy? Depreciation now is something which will have to be allowed by the assessing officer. In case the case is selected in scrutiny, then after obtaining the particulars as per rule 5, then the assessing officer is duty bound to allow depreciation even if it has not been claimed by the assessee in the return. So I do not know whether your assessment has been made under section 143(3) or not. It is not coming out clearly, but then we rest assured it is the bounden duty of the assessing officer to allow you the depreciation even if it has not been claimed.
Okay, thank you, sir.
Yes, Gupta sir.
132(5) explanation 5 will also come to the shelter of the assessee, sir.
Yes.
Thank you, sir. Nitish ji, do we have time to continue, or you will be going to have the next session because you have allowed us to take Nitish Morji?
Sir, Nitesh Morji is not there actually. Now,
So Pallavi ji, should we continue, or you have a time till 5:45? You have given us time till 5:45.
yes, sir. Sir, I think we need to wrap up this IT session and we have to go to the
sir,
next
thank you
session.
so very much, Dr. Rakesh Ji Gupta. You have joined from Delhi, sir. Views Exchange Helpdesk is we are really obliged to you for joining this session of Helpdesk. CA Santi Ji Gupta, SS Gupta Ji, we are extremely thank you and very, very thankful to you, sir, for joining this session of Views Exchange Helpdesk. CA Ramesh Ji Patodia, many, many thanks for joining and guiding our these viewers on this Helpdesk session. So many, many thanks to all three of you for joining and guiding and helping our members at this session, sir.
Anupji, thank you for moderating the session very well, and all my fellow speakers.
But बात क्या है कि सर हम लोग प्यासे रह गए. Question हमारे इतने थे, मतलब even I could not complete the questions from my Excel sheet even. So I really, the time is only 45 minutes and the questions were taken from chat box as well as from the Excel sheet. So we will definitely join sometime next later on, sir. Thank you so very much. Thank you so very much.
Thank you, Gupta sir. Thank you, Patodia sir.
Much obliged.
Thank you so much.
Thank you, Anup.
Thank you, Anup ji, for coordinating and moderating this session. And thank you so much, Rakesh Gupta ji, Ramesh Patodia ji, and SS Gupta ji for the wonderful session. I think a lot of queries has been cleared for the participants, but still there are a lot to go. And I hope we will do the next session as soon as possible for the guest speakers with the further questions. Thank you so much, sir.
Thank you.
And thank you so much, sir. Now I would request Vishnu Basia ji to introduce our next speakers and start the session. Vishnu Basia ji, आप mute हैं, unmute कर लीजिए, please.
Am I audible right now?
Yes, sir, you are audible.
Yeah. Good afternoon, friends. We have already completed our GST session, and then we have completed right now income tax session. Now we have very important session which is related to Companies Act. We have very learned speaker. We have CS Devesh Goyal ji and CS Amit Kumar Dubey ji and CS Mohan Ram Goenka ji. But I had information that CS Amit Dubey ji could not be available for some unavoidable circumstances, and CS Mohan Ram Goenka ji will be joining later.
Sir, Amit Kedia ji is also joined later.
No, that Amit Kedia ji will be joining in our last session, which is related
Yes,
to MSME and RERA.
Yes,
So when we'll be starting that session last, then we'll be introducing Amit Kadia ji. But right now we'll start from CS Devesh Goyal ji. I have brief introduction of CS Devesh Goyal ji. He's practicing company secretary and very huge and rich knowledge on Companies Act. And friend, before CS Devesh Goyal ji will be starting, and I have some information that we'll be taking, we have got queries from members. One query is sheet from Excel sheet that we'll be discussing. Second query we'll be getting from our chat box. We'll be having those queries from chat box. So one by one, we'll be taking those queries from your side. Friend, now I request CS Devesh Goyal ji, please start your deliberation, please.
Thank you so much, Vishnu. Thanks for the introduction. So today, as we know, we are going to discuss in this 45-minute session on the different portions of the corporate law. So I just say thanks to the Nitesh Moriji for giving me an opportunity to interact with all such members throughout the country. So without taking much time, sir, I would request you that we can start with the question answer session so that we can take up the as many as query of the member we can take up.
Okay, CS Devesh Goyal ji, you have Excel sheet you have in your hand?
Yes, Excel is with me.
Yes,
so
because
we have to start with the chat box.
yes, let me see the chat box, please.
Yeah. I think there are 2 queries in the chat box.
So we have one question from chat box. An ongoing partner propertyship concern. It is related to Companies Act, na? 1 second.
It is related to Company Act.
Yeah.
Yes.
Let me read out. An ongoing partners propertyship concern is taken over by a private limited company as on 1st January 2022. The proprietor is not a director of the company so formed. All assets and liabilities are transferred as on 31st December 2021 to the company, and capital balance of the proprietor is transferred as current liability. Is any form required to be filed by the company with the register of companies for such taken over of business, sir? Over to Devesh.
Yes, sir, thank you. Practically, there is no process under Companies Act which govern the takeover of the proprietorship firm. So proprietorship firm practically cannot be takeover. The only thing is that all the asset and liabilities can be transferred to the company by amendment in the memorandum of association. So hope so during this process, you first have amended your memorandum of association and you have mentioned a clause in your memorandum of association regarding the takeover of the asset and liability of this company. Except that form, which I am telling you about the takeover of the assets and liability of the company, there is no other form practically required for the takeover of the proprietorship firm.
Okay, next question. We are from Nishant Gargi. Can a private limited company paid monthly remuneration to non-executive directors by establishing employer and employee relationship and cover it under salary, or will it be covered under sitting fees or other professional services other than salary?
So first thing, practically, the salary under Companies Act, the remuneration to the director under Companies Act governed by the section 197 of the Companies Act. But section 197 does not applicable to the private limited companies. So in that case, we can opine that, we can say that in case of the private limited companies, number one, you can pay any amount of remuneration to your directors, whether they are non-executive director or whether they are the executive director. If you are paying to the non-executive director, you can show them that they are working for the company on the part-time basis because they are not the whole-time director or executive director of the company, and you can pay them as a remuneration to the director. Remuneration to the director, definitely you can pay to the non-executive director in the private company also. You don't have to show it as a sitting fees. Remuneration is completely allowed under Companies Act.
Next question from CA Rajiv Jha. if company incorporated and share money not deposited, how the commencement INC 20A filed, and then all annual compliance, how to fulfill?
So this is a very important question these days. As per section 10A of the Companies Act, whenever a company is incorporated, within 180 days of the incorporation of the company have to file form 20A, that is commencement of business with the registrar of companies. Now there are some criticalities here in the section 10A which we generally don't look at. बहुत सारी ऐसी चीजें हैं जो हमें सेक्शन 10A में फोकस से देखनी है. नंबर 1, सेक्शन 10A बोलता है कि जब तक आपका फॉर्म 20A फाइल नहीं होता है, जो कमेंसमेंट ऑफ बिजनेस का है, आप अपना बिजनेस स्टार्ट ही नहीं कर सकते, आप कोई लोन का ट्रांजैक्शन भी नहीं कर सकते हैं. तो सर आपका जो क्वेश्चन है ना, जिसमें आपने पूछा है कि कंपनी ने डिपॉजिट शेयर होल्डर से सब्सक्रिप्शन मनी आई नहीं है, तो हम कैसे एनुअल फाइलिंग करेंगे, कैसे 20A फाइल करेंगे. फर्स्ट थिंग, अगर कंपनी के पास सब्सक्रिप्शन मनी नहीं आई है तो आप 20A फाइल नहीं कर सकते एंड आप बिजनेस भी स्टार्ट नहीं कर सकते. तो आपके पास एक ही ऑप्शन है कि आपको कन्विंस करना पड़ेगा उस सब्सक्राइबर को टू डिपॉजिट द मनी, और वो सब्सक्राइबर अगर डिपॉजिट नहीं करता है, यू हैव टू फाइल अ केस अगेंस्ट दैट सब्सक्राइबर इन द कोर्ट. Then only you will be able to file 20A. But without receiving of money, you are not allowed to file that 20A. This is the restriction under Companies Act. So we can compile it like this. If the subscription money has not been received, you cannot file 20A, you cannot start your business, or you cannot proceed for filing of any other forms also.
Sir, there is no question further in chat box. So we have to discuss from our Excel sheet.
Sure, sir.
So sir, you have Excel sheet in your hand, sir?
Yes, it is open with me.
Sir, actually, there are more than 50 questions in Excel sheet. But because of time constraint, we will not be able to take all these questions from Excel sheet. So we will be discussing one by one.
Yes,
sir,
sure.
And the respective questions are very long. So I am reading slowly for understanding of the members and understanding of our learned speaker, Devesh. Question number 1. It is from Pawan Kumar Agarwal ji. Sir, till date, my client book of accounts was in accounting software. Now, to avoid audit trail, my client wants to maintain manual books of accounts. Will it be violation of Companies Act or any other act, and would be the consequences if manual books of accounts maintained in future? One question. And the other question is, further would be the answer will be different if till date it has maintained manual books of accounts, which the company wants to continue the same.
Okay. So let me take up this question, sir. As per the provision of the audit trail is applicable on the companies who are preparing their books of account in the electronic mode. Practically speaking, as on date, 99.99% of companies in India are preparing their financial statement books of account in the electronic mode, because the preparation of the books of account in Excel shall also consider as a preparation in the electronic mode. So one thing, it is very difficult these days to prepare anything in the manual. But as per your question, if your client, if you can prepare your financial statement, your books of account, you can manage your books of account in manual mode, then definitely it is allowed under Companies Act. There is no violation of the Companies Act or any other act if you maintain your books of account in the we can say manual mode. But just remember one thing, some things which we have to remember, like if you are raising any invoice, you are getting an invoice, all these things should also be in the manual form. If you are using any software to raise the invoice, to issue the invoice, then it will be considered as using of the electronic mode. So if you are doing manual, then everything should be in manual. Then it is allowed under law, there is no issue. But practically, I will say it is very difficult to maintain under manual mode.
So one thing I would like to add here, the company which has also filed the AOC 4.
Yes, sir.
Their maximum company has mentioned that they are maintaining the account in computer mode. So that will be catch by the ROC.
Yes, but you can do one thing in that case. The AOC for you have filed for the previous years.
Yes.
Then you can do one thing. Till that year we were maintaining in the electronic mode, but now we are preparing in the manual mode, which is allowed under company law because it is not restricted. You cannot change the mode. So that will allow.
Yes,
that
so we
is-
welcome CS Mohanram Goenka ji. He has just joined. And next question, any update of the petition filed in Delhi High Court for waiver of additional fees from June 2023 due to updation of MCA portal?
Sir, as per the scenario or as per the webinars of the Ministry of Corporate Affairs with the ICAI and with the ICAI, they are giving an impression that the site has been start working properly now. Even earlier there was so many issues. Now the issues has been resolved in a maximum level. So practically, it does not mean that there will be any extension.
Yes.
Yes. So according
Our next question to CS Mohanram Goenka ji.
Yes, sir.
Advice to our fraternity to avoid ROC notice on professional, as if we are misleading or guiding the company to do misdeeds.
Sir, question is not clear, sir.
Advice to our fraternity to avoid ROC notices on professional, as if we are misleading or guiding the company to do misdeeds.
Advice to our professionals.
Yes, yes.
So in that case, so what advice we will give to the professional? Professional already know
Yes,
the
sir.
thing.
Deveji, what is your opinion, sir?
So I would just like to say that these days ROCs of the countries are very active. They have started issued so many notice of the adjudication. Even the Ministry of Corporate Affairs has created a new department in the name of CSC, Central Scrutiny Center. The only work of that department is to scrutinize the STP mode forms. So we professionals have to work in a very careful manner in the future, because it's nothing like a earlier time that ROC is not issuing the notice. These days ROC is issuing the notices for the non-compliance of the letterhead, for delay in filing of the form. So the only advice I will give to our professional fraternity, so my advice will, please make sure that we have done all the compliances as per law, plus we have filed the form within time, because delay in filing of the form is also a big non-compliance, and ROCs are imposing the penalty in lakhs for such type of non-compliances also.
But sir, here also one thing is there, na, many professors are misguiding the regulator to issue the so-called notices. That is also practically happening.
I think practically, sir, I don't think anyone can stop. So the only thing as a professional we can do, we can guide our client to work in a proper manner so that no misleading will help them.
Sir, because what the professor is doing, what he is doing in the regulator's chamber, that so nobody knows, na.
Exactly, sir.
We cannot go in that.
Another question from Jainaran Gupta ji. Section 424 allows the NCLT and NCLAT not to be bound by CPC. Whether the underlying logic in the CPC is not the guiding beacon of NCLT and NCLAT.
It is there because we have come across such type of situation where 241 petition was filed in Barasat court in our this Calcutta region and other regions, but that has to be filed in straight away in the NCLT. But in spite of that, many advocates, they are insisting that they are filing the petition other place. That is being done again by some of the advocate fraternity, we can say. They are guiding that they are filing in other courts. They are telling that we will give you this benefit, that benefit, but that is not actually happening. Whenever we are coming to NCLT, then everything is being quashed. So,
yes, because if you are filing anything under 424, that should be go to the NCLT or NCLAT, because the power are vested with them under the law.
In High Court Calcutta also many petitions were filed regarding the Calcutta. But High Court Calcutta is not entertaining those type of petitions, but other small court, Barasat court in Calcutta region, they are entertaining those petitions. They are also giving the judgment. In one of my case in 241 petition, Barasat gave the injunction, but that is not valid in the eye of law. Exactly. After that, everything was quashed by the NCLT judgment. So this is happening by the professionals itself, which is not a correct thing.
Pooja Goyal ji is asking, it is in respect of, again, audit trail. In case of diagnostic center, which is having a separate software, for billing, is audit trail required in the billing software also?
Yes, sir.
Audit trail provision, it is very simple. It is simply saying all the books of accounts. Books of account include every type of transaction of the company. So whether you are using any software, you are using any software at your, we can say, your showroom, you are using any software at your shop, that all software should also have the audit trail feature. Like if I give an example, there are the big stores like Big Bazaar, Reliance Trends. All these stores, whatever software they are using for invoicing, all those systems should also have the audit trail software.
Ashish Agarwal is asking, there is no revenue from operation with reference to object clause of the company. How long this situation can be carried on?
So section 248(2) is clear. If the company doesn't have the revenue from operation, then they may be struck off by the ROC. ROC has straight away power under section 242(2). That could be done by the ROC any day. So the company has to take steps to have some revenue from operations from the main object. Otherwise, there would be problem in the future.
Yes. One more point, sir, I'd like to add here. See, in the 1956 Act, there was a two option with you for you in the object clause, the main object and the ancillary object. Companies Act 2013 does not have any ancillary object clause. So as per the Companies Act 2013, if you are doing any activities which are not mentioned under your main object, then it is a non-compliance of the company law also. So as per your question, if you are not getting revenue from your main operation, but you are getting revenue from the other activities are not mentioned under your main object, then it is a non-compliance of the Companies Act section 13. And if any day the government, any day the department will come to know about the same, they will definitely issue the notices for the non-compliance of section 13. Because as per Companies Act, you are allowed to do only the object mentioned under the main object of the company. Ancillary option is not there under 2013.
Section 180, 185 and 186 of the Companies Act 2013 not complied in the past. Can it be ratified now by the shareholders? And if not, what are the pros and cons?
Sir, 186 is non-available, non-compoundable. It is a very dangerous section. People are not thinking for that. It is non-available, non-compoundable. 186. What is the remedy? Nothing. There is no remedy for that.
No remedy. Once they will issue the notice, then company have to you go for those reputations.
Another question, Pawan Kumar Agarwal ji. A company has opted for Vivad Se Vishwas Act 2020 for share premium from 5 shareholders, which constitute 8% of the total shareholding. MGT 7 filed with ROC revealed that those 5 shareholders have never attended the AGM of the company. Now, as the company has paid the tax on share capital as per Vivad Se Vivad Act 2020, can the company omit the name of those shareholders? If yes, then what will be the procedure? If not, then whether ROC will take any action on the company having host shareholders?
See, sir,
Yes.
that as per the question, if they have received the money from any shareholder, and from any person, if they have received the money from against the shares, then they have to show them as a shareholder. There is no option to not to show them as a shareholder. I would like to take the view of the sponsor also.
Sir, here some of the company has gone to NCLTs also nowadays.
Yes.
They are for schemes and filing those things in the NCLT.
I think
The section 6.
yeah, I would like to add, I think Vivad Se Vishwas scheme has to be looked into. This scheme was very clear. Only whatever benefit was given, only to the extent of income tax was concerned, this benefit was given, and not regarding other things. So in many cases, in Vivad Se Vishwas scheme cases were there, no proceedings were taken by the income tax department, but MCA is free to take any step.
Yes, because that scheme cannot override the non-compliance of the Companies Act. Non-compliance of the Companies Act are still there, so you have to work on that.
And no liberty was given in the scheme. Like in the earlier Vidya's scheme, some liberties were given. But in this scheme, there was no liberty given.
Vishnu sir, I just have one point here.
Yes.
As I can see, there are the 13-14 question in the chat box. So all the person are present here. Can we take up that also along now?
1 second, sir. Let me check. Yes, one question is there in chat box. Company and other contributing subscribers should file the case jointly as both become aggrieved person.
So the question was here, who will file the case in case of the subscriber has not paid the subscription money? So practically, subscriber have to pay to the subscription money to the company. In that case, definitely the company have to go for the suit against them, but definitely other shareholder can also be the party in the case against the person who is not paying the subscription money.
One question from Mr. Gautam Laluatia. Sir, is it compulsory to file MGT 14 by unlisted public limited company?
For what?
So I think, sir, they are asking about the section 179 subsection 3.
If it is applicable, it has to be filed.
Yes. So whatever will be mentioned there under 179.3, all should be filed under public company. There is no exemption to public company.
It has to be filed.
Yes.
Mr. Nissan Garg is asking, can a private company issue shares at premium, which is much more than the book value of the shares? Shares are issued by the private company without taking valuation from the registered valuer at the time of issue of shares at premium. Can the registered valuer make the valuation report for those shares after 4 years by signing his report at present date?
So you can take up.
Sir, in this case, though, we have to also look into angle of Income Tax Act. 11 UA is there, but nobody allowed to be signed after 4 years. Valuer also doesn't allow to be signed after 4 years. Registered valuer 247 is totally clear. And nowadays, after signing after 4 years is totally a question mark things. None of the valuer will agree because now many questions are also being raised by the IBBI. They are also creating many issues regarding such type of valuation or any higher valuation as such. To my mind, this is not a good thing. We should not go such type of practice.
I just want to add one point, sir, here. Just from the point of view of the Companies Act, definitely whatever answer I'm giving for this question, you have to analyze the Income Tax Act. As per Companies Act, as you said, you have already issued the shares. If we have issued as a right issue of shares now, in case of right issue of shares, there is no need of the valuation from the any person under Companies Act. So if it was your right issue of share, you are safe under Companies Act. You just have to look at your Income Tax Act, how you will tackle there.
It is not a right issue.
Yes.
It is not a right issue.
Okay, it was not a right issue. Then as per Companies Act, there was definitely the second option was a private placement, and private placement was not allowed without the right issue, also without the valuation report. So as per Companies Act, this is violation of the section 42 also. You have to go with the RD for the adjudication of this offense. And the penalty under this section is equal to the amount of allotment on the company and on the directors. So it is a very penalty in this section.
And sir, can shares issued be at premium in case of a private company, which is much more than the book value of the shares?
So there is a violation of the Companies Act as well as there will be violation under Income Tax Act also. So in that case, I practically tell you what will happen once you will go for the adjudication petition with the ROC, with the RD, Regional Director or ROC. They will first say you to refund this amount with the interest, and they will impose the penalty of equal amount of the allotment on the company as well as the director. There are already 2-3 cases of the different ROCs already published on the MC website of the same matter.
And sir, if a company keep money received from the shareholder in his bank account more than 6 months, and after 6 months it issues shares, then
once 6 months will complete, it will be considered as a deposit and it will be default of the section 73, and you are liable for the penalty under that section. You cannot allot after 6 months. You have to mandatorily refund with the interest, and default is also there.
Yes, sir. One member is asking, I have activated in Tally Prime. I have entry sale bill old date. My query, I can entry sale bill old date or mandatory for current date. Also, I have mistake previous month freight entry. Can I entry freight entry old month as of now?
Mohan sir, you can take it, please.
So this is again regarding to the audit trail. As per the audit trail, the thing has to be seen from the end of audit. There, the backdate entries are not at all allowed. Today, if we are doing the entry and the audit trail came on 1st April and we are doing the entry today on 6th May, so that is again a violation. So those things has to be taken carefully. Otherwise, today nothing will happen. But whenever the audit report will go to the ROC, those will be filed, I think in October 24, then those will be monitored by the MCA, and whatever the violations, prosecutions of section 1 and 128 subsection 5, those will be levied against them.
So
One member is asking.
Here, just
Yes. Yes.
now practically, which I can observe now, the purpose of the audit trail to find out the illegal transaction, wrong transaction, like if anyone is changing the entry. So like in the question they said ki by mistake I have made a wrong entry of the freight. Now I want to change it. So practically I would suggest ki you should change that entry. Any changes is not a non-compliance. The non-compliance is the thing when there will be any fraud by changing of those entries. तो कोई भी एंट्री चेंज करना कोई इशू नहीं है, वो अलाउड है, आप चेंज कर सकते हो। आपने कुछ गलत कर दिया तो आप सही तो करोगे उस चीज को, बट वो जो ट्रेल बनेगा ना, वो ट्रेल एनालाइज ऑडिटर करेगा कि जो चेंज किया है क्या वो नॉर्मल चेंज था, क्लरिकल चेंज था या कोई फ्रॉड रिलेटेड चेंज था। दैट्स द ओनली थिंग।
One member is asking, maintaining books of account tally and later on taking printout, does it mean in manual mode or electronic mode?
Electronic, obviously. Obviously, electronic mode.
Yes, definitely. And as an auditor, all the onus will be on you because you certified the audit report. So definitely it will be considered as an electronic only.
One question is there. Will audit trail cover software such as attendance software used for salary calculations, CRM, customer relation management, used for sales and marketing activities, and such type of non-accounting software?
Sir, please.
Only related to books of accounts, sir, to my knowledge.
So salary calculation, I may say, salary calculation, if your software is doing, means along with the hours, the amount and everything you are doing there, and accordingly you are preparing your, we can say, salary invoices, then you have to consider that also. But other like CRM and all not covered in that.
The one member, see Rajesh Agrawal is asking, I have not filed DPT3 of a company as at 31st March 2020, 2021 and 2022. What should be done?
सर प्रैक्टिकली अगर आपने कोई भी फॉर्म नहीं फाइल किया है तो उसके लिए देखो सबसे पहला सॉल्यूशन कोई भी प्रोफेशनल बोलेगा कि आप उसको फाइल करवा दो। क्या एडिशनल फीस के साथ फाइल होगा बट फाइल करवा दो। नाउ द सेकंड थिंग आती है एडिशनल फीस तो पे कर दी, अब पेनल्टीज लगने की जो बात है तो दैट इज कंप्लीटली द डिस्क्रिप्शन ऑफ द आरओसी। वो तो आप आज भी नहीं बचोगे, फ्यूचर में भी नहीं, तो बेटर है कि जितना जल्दी फाइल हो हमें फाइल कर देना चाहिए। होप मोहन सर एग्री ऑन द सेम।
Yes sir, I agree sir, totally agree sir.
Company registered under Companies Act 1956 stopped business and so is not pursuing main object but had the ancillary object of giving premises on rent. Now the property is earning rental income. Then should the MOA be amended?
It should be. It should be 100%. It should be amended.
If we are doing this rental business without mentioning this rental object in your main object, then it is a non-compliance of the company law. Because ancillary objects are not part of the Companies Act from the 1st April 2023 or 2033.
Again, same section 13 violation.
Exactly.
CA Ashish Agarwal is asking again, in financial year 2021-22, the company having adequate profit made provision for CSR, and now in financial year 2020-23, the company is either having adequate, company is either having inadequate profit or suffered loss. Whether the company need to make provision in CSR in financial year 2020-23.
Yes, sir.
23 is not applicable, but for 22, already they have filed the CSR2. 22, already they have filed CSR2 on 31st March. So that compliance has to be done.
So the only thing is that जब ये Companies Act में the CSR section came in 2013, at that time the provision was like this: once a CSR is applicable for next 3 years. But in 2020, when Ministry have made the amendment under 135, after that it is like this: ki every year you have to check the applicability. So every year you have to check whether you have crossed the limit or not, and accordingly you have to apply. You cannot say ki it was applicable in the last year, so it will be applicable on the current year. No, nothing like this.
It is not there. Immediately preceding financial year is there now.
Is it mandatory to get valuation to be done rights share, which are ultimately renunciated in favor of new shareholders?
So right shares valuation is not required. First thing. Second thing, renunciation, Company Act say renunciation, but to my knowledge, as per the income tax now, the income tax officer, they are taking it as deemed dividend. So that area should be again explored properly. Otherwise, their heavy income tax will be charged to them.
Yes. Otherwise, as per company law, there is no issue. Whether you are renouncing, whether you are issuing to the existing shareholder, no need of valuation.
We have the provisions of renunciation. We are not creating any problem for renunciation. But income tax is creating problem. They are telling that it is deemed dividend.
Exactly, sir.
In case of producer company, the shares allotment has made after 1 year or 10 months. What is the consequences?
Yes, sir. Tell, sir.
Yes.
You take this question. Producer company.
No, no issue. This is completely a non-compliance. Number one. Second thing, every producer company have to file the forms with the ROCs after issuing increasing the number of shareholder, which they will be not able to file. So definitely after 1 year they can file the form, but ROC will consider it as a non-compliance. And if ROC feels so, they can issue the notice of the adjudication also to the company. Now you can take from the Excel sheet, sir.
Okay.
Further some question.
One question from CA Lalit Kumarji. Two private limited company having formed a joint venture consortium as separate legal entity as AOP. One company holding about 90% of operation and having capital about 90% of such AOP. One company want to prepare consolidated financial statement incorporating details of AOP.
Are you taking up this?
Yes, Devesi, please go ahead.
Okay. So, sir, देखो, Companies Act, the concept of the consolidation is simply saying you have to consolidate the account of all your subsidiaries and the associate companies. AOP is neither a company. AOP is not a company. So, doesn't matter ki how many share, how many contribution you have made for the AOP, but there is no need of the consolidation of the AOP in the company's balance sheet.
In V2 used to log in using DSC. Now V2 now not allowing to reset my password as this facility is not available for DSC automation user. V3 is not recognize my user ID, trying to find resolution for MCA.
So I have came across so many cases like this. As since the very first day of the MCA V3, I'm working on the same thing. These type of issues now, when you have earlier you was having a business user ID, now you want to convert that into the V3 portal, you have to take the help of the MCA. MCA will reset your password and give you the password, then only you will be allowed to use that ID. There is no other option with you.
Yes, sir.
Yes, it is again related to V3 e-forms filings issue.
It is a technical
Cannot upload the signed form FC2.
These are technical issues that only MCA can resolve by the tickets raising. I know it's a cumbersome process, so many tickets we have to raise, but we have to do. There is no other option for the
other option. I agree, sir.
Can a private limited company give a loan to a LLP, while directors of a private limited company and partners in LLP are same?
Yes, sir.
Mohan sir, you can please take up.
Yes, sir. Can you repeat the question, sir?
Can a private limited company give loan to a LLP where directors of private limited company and partners in LLP are same.
Sir, in this case, section 185 is applicable if we are taking the LLP as the body corporate. In some of the cases, they are taking the LLP as the body corporate. In that case, to be on safer side, it is better to take the approval of 185. There we have to simplify the MGT 14, nothing more than that. And in case we think that LLP, whether giving of the loan to LLP doesn't come under definition of body corporate, then we can avoid. But to be on safer side, to avoid any doubt for that, better to file the MGT 14, to my mind.
Right. So 185 subsection 2, you have to pass a special resolution and you have to file the MGT 14, then you can give the loan.
If a company starts a new business altogether different from its main object clause, but the same is covered in other objects of the company, do we still need to amend our object clause? And if yes, will it also lead to change in the name of the company?
So sir, Jaisa Pele, as we have given the answer, there is no concept of the other object under Companies Act 2013. So if you are having your old MOA as per 1956, first that object into your main object, then only you are allowed to do that business. Otherwise, you are not allowed to do that business. Further, whenever you change your business, it does not mandatory to change your name. It is totally your discretion.
Can a company give loan to LLP? Case number 1, if LLP is related to company. Case 2, if LLP is not related to company.
So in this question, the related I did not understand in what manner they are saying related or not related. Like Mohan sir, I have already given the answer in the last question if director are the same. So
Yes,
that's
sir, yes.
already answered. So I don't think there is any other view on this.
Yes, sir.
Whether investment made in mutual fund and quoted shares need to be considered while calculating the limit specified under section 186(2)(c) of the Companies Act 2013.
Investment in mutual fund
and quoted shares. I think it is related to section 186(2)(c) of the Companies Act.
So there are some case laws which I have read in 1956 Act also, in the initial stage of the Companies Act 2013 also. There was some judgment which saying that investment in the mutual funds are not part of the section 186 as an investment. So if you are calculating the limit of the section 186, practically the investment in the mutual fund shall not be considered.
Okay.
It is related to small companies, I think. ABC Private Limited company holds 60% of shares of XYZ Private Limited, and both are small companies in terms of section 285 of the Companies Act. His query is whether both the companies will remain outside the scope of small companies in terms of section 285 of the Companies Act 2013.
60%, so then subsidiary not out of the small company definition.
Yes, so both are out of the definition of the small company.
And another related question, whether we have to further check the exemption limit granted to private limited company under CARO 2020 for reporting under CARO.
So once it will be out of the definition of the small company, it is non-small private company. Once you are a non-small private company, so definitely you have to check the limits to check whether CARO is applicable on you or not.
It is applicable for non-small company. CARO is applicable.
According to some limits are there, na sir?
No, there is no limit. For other than small company, CARO is applicable.
Okay.
Yes, there are limits 1 crore, 1 crore and 10 crore.
There are some limits. According to those limits, you have to check.
1 crore paid capital and free reserves, 1 crore loans from any financial institution at any time during the financial year, and 10 crore regarding revenue during the year.
Exactly, sir.
Yes, yes, yes.
Then other than that, it will be applicable. Is not.
Another question from
There are the chat. 2 more questions, I think.
Ashish Agarwal ji. A LLP is formed by 3 designated partners. One of the designated partner undertakes to arrange bank loan to the tune of rupees 50 crores within 3 months from the date of incorporation. And in case, if he fails to arrange bank loan, he will be automatically ceased to be the designated partner of the LLP after the specified period of 3 months. Can a LLP be formed having this type of clause? And if yes, do we need to draft and file amended deed of LLP?
So I did not understand the question. Mohan sir, if you understand, you can please answer.
Question completely. There was
आपके पास एक्सेल शीट में है, आप जस्ट last question,
Last question.
एंड से 3 नंबर देखिए, क्वेश्चन 3 नंबर, LLP is formed by 3 designated partners.
Okay. Consider one of the resident partner undertakes to exchange bank loan to tune the 50 crore which came from the return for in case to arrange bank loan, he will be out of this situation for the LP. See, sir, as the condition you have mentioned in your question now, so as per that condition, if that person fails to arrange 50 crore loans in 3 months, that person will be seized. So once anyone is getting seized from the LLP, definitely you have to amend the LLP agreement.
And second last, can a Nidhi company give unsecured loans to loans against the deposit made by members in the same Nidhi company?
See, there are so many things we have to check because the unsecured loan to the member is not allowed.
Yes, sir.
Are there.
And last one is, yes, Goenka ji, go ahead.
Yes, many other criteria has to be seen. Therefore, we cannot simply say regarding so easily for the company.
And last one, SH7 form since 1 month.
So your technical
form. Last one, sir. Last one.
I'm saying this is a technical issue only because they are not able to file, so they have to visit the ROC and they have to get it resolved from them.
Yes, sir. Yes, sir. Agree, sir.
So I think
we have almost come to an end. Anything from our learned speaker, Devesh and
yes, sir.
Mohan Goenka ji?
Just sorry, sir, for interruption. Just one thing. There are one question in the chat box. The last question: if LLP has stopped working, is it required to close the LLP? So I would like to answer: if any business like company or LLP, if you are not conducting any business, so as per the provision of the law, definitely we should.
सुतानु और बैकपैक टू लैपटॉप नीचे था ना इंटरनेट.
Yes, Devesh ji, please go ahead.
Yes. I am saying if any business, if you are not working like company or LLP, so as per provision of the law, we should definitely go for the strike off of them. Now, Vishnuji, it's on you. Mic is yours.
Yes, it is almost complete.
I have a question. Just if sometime is there.
Devesh ji, if you want to say anything to our members.
Sir, as I have said in starting also, just one thing, these days ROCs are very much, we can say, strict and very much concerned about the compliances. They have created a separate department also to check the STP forms also. So all the professionals, just my one thing, we have to be very careful these days while we are doing the compliance under the Companies Act, because that era has been end when ROC was not issuing the notices. These days, ROCs are issuing the notices and heavy penalties are getting imposed for the non-compliance under the Companies Act. So we have to be very careful about that. Like they have increased so many things. Audit trail is now there. They have made amendment under Schedule 3. Now, day before yesterday on 3rd May, they have added the name of the practicing professional under PMLA also. So we have to be very careful while doing the compliances. Thank you.
Thank you, Devesh ji. And thank you, Mohan Goenka ji.
Thank
for your deliveration, and you have addressed all the questions asked from our members. Now over to Nidhi ji.
Thank you, sir.
Hello.
Yeah.
हाँ sir.
आप vote of thanks दे दीजिए.
Thank you so much, Devesh ji, for clearing our queries. I think participants will have a lot of benefits with the answers from your answers from you. Thank you so much once again. Thank you, Devesh Goyal ji, for attending the session. Thank you so much, sir. Now
thank you, Devesh ji.
Thank you. Now I would request Vishnu Basia ji to introduce our next speaker.
So our next session and last session is related to RERA and MSME, very important topic. And our speaker is CA Amit Kumar Kedia ji. So I am introducing briefly about CA Amit Kumar Kedia ji. CA Amit Kumar Kedia ji is practicing chartered accountant, senior partner Gopal Sharma and Company. Through his more than 15 years of career, he has become recognized for his contribution expertise as a knowledgeable professional, advisor and consultant in the field of RERA, litigation arbitration, SEBI, etc., etc. He has been speaking on various platforms for various topics with regard to professional knowledge, sharing and having in-depth knowledge about his subject. And he has qualified social auditor, NPO certification, and other certifications from ICAI, the association with the Confederation of Indian Industry, Federation of Indian Chamber of Commerce and Industry, and member of the ICAI RERA study group and task force formed by the Committee on Economic, Commercial Law and Economic Advisor of ICAI 2018-19. Now I will not take further time. I directly go to Amit Kumar Kedia ji. I request Amit Kumar Kedia ji to please start your deliberation, please. And
so
then we'll be,
yes,
then we'll be taking some queries, which has been reported in our Excel sheet. There is no much queries about this subject, but as when it comes, we'll take it further. Over to Amit ji.
So before, like, sir, I start, I was looking forward to understand two things. First of all, how much time I am having, like I need to stick to 7 o'clock or like I can take some time beyond that.
Yes, so we can take up to 7, sir.
Yeah, we can
Okay.
take sir 7,
And-
7, 5, 7.
Yeah,
No
yeah.
issue.
Okay. And so second thing is, I would request to come up with the questions which have came so that I can create a background for like what we would be discussing for this another 20-25 minutes. Sir. So if you can put the questions, I would be addressing that questions in my deliberation, would be covering that. So if the questions could be put in.
1 second. अरे वो क्वेश्चन था क्या रेरा वाला क्वेश्चन था ना किसमें था है ना कौन सा क्वेश्चन Sir, one question related to RERA. Amit ji, are you there? Hello.
I'm very much there, sir. Please.
Yeah. It is
Yes,
related
sir.
to RERA.
Mm-hmm.
One member is asking.
Mm-hmm.
We have purchased the pre-sanctioned non-agricultural land from Mr. X, sanctioned and commencement certificate of 2013. In 2022, in the name of Mr. A and Mr. B. Mr. A and Mr. B have entered into partnership and formed the partnership firm for developing the said project. So we have following queries with respect to registration of said project in MahaRERA. Kindly provide your guidance. Can we take RERA registration with same sanction plan and commencement certificate 2013 without transferring the same in the name of partnership firm? And will it be enough if we attach the purchase deed executed in our name along with registered partnership deed for MahaRERA registration, whether all the search, encumbrance and legal title report will be in the name of past owner, means Mr. X, or current owner, Mr. A and Mr. B, or in the name of partnership firm? This is the question.
Okay. So, sir, basically, prima facie, what I am understanding is that the subject of RERA need to be put in place for a better understanding for each and every of our professional members in terms of what is the scope. when we talk about RERA, it looks like that it's only related to the real estate sector, and there is no bigger practice the member are coming forward for. But there is a wrong understanding of this. So if I bring to your knowledge, real estate is the second biggest, yes, second biggest contributor in the GDP of our country after agriculture, and each and every person, that is roti kapda makan. So in that sense, every person is was in bad names was because of the 2008 fiasco, which happened in Noida, and because of which RERA came in 2016 and got implemented from 1st May 2017 across the country. If we talk about specifically towards, say, some states like West Bengal, where the subject is absolutely new, where HIRA
There is some network.
came into picture. And
Amit ji,
RERA got implemented.
your
Amit ji,
voice
there
is
are-
dropping.
Amit ji, your voice is
Dropping.
Is it fine now? Is it good?
No.
Good time? Is it good now?
Sometimes it is fine, sometimes it is disturbed.
Okay. Okay. Is it coming?
No, not coming properly.
I think he got disconnected.
Is it fine now?
Right
Yes,
now,
sir.
you're fine. Yes, please go ahead.
Okay. Thank you. So now, on 4th May 2021, HIRA got repealed and RERA came into picture. And for almost 17 months, the act was null in West Bengal. And then on 31st of January 2023, the RERA authorities opened their portal. With this, the registration start happening. The registration start happening, and as on date, the website of RERA West Bengal is working absolutely perfectly fine. Moving forward, what opportunities are there in the RERA could be understood by the real estate sector's mother body, that is the Ministry of Housing, which comes with a monthly and a quarterly publication of the RERA registered projects in the country. So friends, there are 99,000 projects which are registered under RERA, and 8 states where the RERA have not been fully implemented. So the data of 1 lakh is so big across the country, and so big is the opportunity. Secondly, there are almost 80,000 agents who are registered under RERA across the country. And in terms of cases, under Section 56, we as a chartered accountants professionals, along with company secretary, cost accountants, and advocates, can practice in the field of RERA. That is, we can appear ourselves to the RERA authorities, we can appear to the tribunal. This is the big 1 lakh cases. Yes, 1 lakh cases in 5 years in our country, which have been come under consideration as a decision making by the RERA authorities in the country. And this is only, yes, this is only 30% of total cases filed. So understand about the registration, about the compliances of these projects and the litigations. Now, friends, seeing this big opportunity, we can understand whom it would be applicable to. It would be applicable post developments, developments which have more than meter of land to be developed, or 8 units, more than 8 units which are required to be developed. So friends, if anyone gets breaches, then in that case, though anywhere in the part of the country where RERA have been notified are required registered with their respective RERA authority. Some of the RERA authorities in the country have put in place that only the planned area would be covered. Some says only the planned and the unplanned area, both would be covered. So it would be taken in respect of the respective state in which we need to see the project which is to be registered. Friends, the project where redevelopment need to be done, where there is no advertisement which is required, projects where there is no advance which are required, all these projects will not be requiring RERA registration. That means if any project just is for a leasing purpose, then in that case, those projects would not be requiring RERA registration. So this is where is the applicability of RERA is. The project we need to identify and see, guide our clients, the projects which are requiring RERA registration. Friends, project of housing developments, that is the high rises, projects of plotted development, projects of commercial development, all will be requiring RERA registration. There is a myth and a confusion in the fraternity of real estate, wherein it has been understood that the plotted development are not required to be registered under RERA. In addition, some of the states like Tamil Nadu, Maharashtra, Rajasthan had came clarification wherein industrial are also required to be registered under RERA. In the Act, it has not been cleared that which project in terms of industrial would be covered. As per our opinion, personally, yes, the industrial are not covered, but these some of the states have came with a clarification that now the industrial projects would also be covered. Moving forward, at the time of registration, if any of the projects are put in place, then all the details and drawing of the floor plan, all the details KYC of the promoters, directors are required to be submitted to the RERA authorities, along with if in case any litigations are going on, then in that case, those litigations also need to be put in place and need to be added on, needed to be updated with the RERA authority. So if I say in a summarized manner, it's a long list. It may take another half an hour to just tell what all documents are required. So to cut short that, I'm just telling the inception of the land, the inception of the project, combined together, all the documents need to be put in place for registration at the respective RERA authority in which that particular project falls in. Moving forward, for all projects, if I like to subdivide the project, then that project would be considered and understood to be a particular phase. And if that phase is to be registered, that phase would be considered as a separate project in eyes of a authority. So taking an example, if maybe 10 towers are there in my project, and for every 2 towers, I get a phase plan and register those 2 towers to the rail authorities, then these 2 towers would be considered as a phase. So for the total project, which had a sanction plan of 10 towers, there would be 5 RERA registration number. They would be considered as 5 projects. Why I am again telling this in a deep sense that every project would be a separate project, that is because what I would be saying now. Section 4(2) LD of the RERA Act says that every project need to have a separate registration of a bank account. Every project will have a separate account wherein the money would come from the allottees, and it would be distributed in a form that the 70% of the amount is to be parked in a separate account, wherein 70% is to be only utilized. That should be only utilized for the project. And how I can bring out the money out, that would be absolutely on the percentage of work completed in that relation to the percentage of work which have been done for tech engineer and a chartered accountant certificate would be required. After that, the amount, the quantum which the certificates of architect, engineer, and chartered withdraw. Again, friends, I would be cut short this thing because itself section 4 LD explanation would take maybe an hour or hour and a half. So
अमित जी आपकी वॉइस ब्रेक हो रही है.
I would like to. Is it fine now?
सर ऑडिबल नहीं है, प्रॉपर्ली ब्रेक हो रही है, बहुत डिस्टर्ब है.
Okay, so what I do is put off my camera so may the voice may be much more better.
Sure, sir, sure.
Yeah. So is the voice improved now?
Yes, sir.
7 and I have just 5 minutes. So first, if something is less in question and we have availability of time, then I would.
अमित जी नेक्स्ट क्वेश्चन अपने ले लेते हैं जल्दी से.
है ना, मेरे को बोलने का बहुत कुछ है लेकिन अभी बोल नहीं पाऊंगा मैं. पहले क्वेश्चंस लेते हैं अपन.
टाइम का थोड़ा कंस्ट्रेंट्स है सर.
बोलिए.
अभी नेक्स्ट क्वेश्चन अपने ले लेते हैं. सीए अनु कुमार संघाई जी आस्किंग an industry association having status of a section 8 company engaged in developing of industrial park for its members by way of buying undeveloped land from farmers and eventually developing and allotting the same to its members only in the state of West Bengal, whether RERA is applicable on company. Hello. अमित जी आपकी वॉइस ठीक से नहीं आ रही है.
अगर ये स्टेट्स तमिलनाडु है, महाराष्ट्र है और राजस्थान है तो डेफिनेटली रजिस्ट्रेशन चाहिएगा इसके लिए.
नहीं, वी आर टॉकिंग अबाउट आवर वेस्ट बंगाल पर्सपेक्टिव.
अच्छा, वेस्ट बंगाल पर्सपेक्टिव से भी चाहिएगा क्योंकि वेस्ट बंगाल ने क्लैरिटी नहीं दिया है. अभी 3 प्रोजेक्ट्स वेस्ट बंगाल ने रिजेक्ट किए हैं इस बेसिस के ऊपर कि हमें रजिस्ट्रेशन नहीं करना है इंडस्ट्रियल का. तो उस पर्सपेक्टिव से आप एप्लीकेशन डाल दीजिए और वहां से रिजेक्शन करवा लीजिए. उस केस में आप सेफ रहेंगे. रीजन कि कभी बाद में वेस्ट बंगाल अथॉरिटी ये बोल दे कि आपको रजिस्ट्रेशन करवाना था तो आप लोगों को इशू नहीं होगा, परेशानी नहीं होगी. दिस वुड बी माय फ्रेंडली एडवाइस. Else a letter could be written to the West Bengal RERA authorities and a clarification could be taken.
Thank you, Amitji. Next question we are taking from MSCB point of view. I want to know about all subsidy schemes in Haryana for MSME in Haryana, whether it is on purchase of plant and machinery or others. Amitji?
Small time question. The detailing need to understand with the machinery and the stuff which they are purchasing, and accordingly this subsidy would be decided. So rather than giving a generalized answer, a specific requirement need to be understood, and then it should be addressed. Overall, yes, it will be applicable.
And there is no other question. I think we have to see the chat box. Pallavi ji?
Yes, Vishnu
Yes,
ji,
we can
take
wrap.
one, two questions, two questions from chat box also.
Let me check. Sir, one question is there. My client booked a flat in 2018 with the initial payment of rupees 25 lakhs. As only 20% work is complete. Deadline of the project is 2020.
Deadline of the project was 2020 until 2020, 40% is complete. So client not paid any amount even to builder demand. Can they claim interest from the builder till now, as till now 50% project is complete?
It is a very subjective question. We need to do a study, a mathematics, I should say, the construction link plan, and looking towards this example, it looks like the developer is at a fault. So interest, but again, I would be cautiously saying that we need to put a one-to-one understanding of the construction link plan. But overall, yes, we can. Yes.
Okay. Sir, एक और question है राजीव प्रकाश जी का. A dormitory inside an industrial area needed RERA registration?
No, जी, no, not at all. Not.
Okay.
और एक question है इसमें. Some banks are appointing agent to insist the flat purchaser to take loan from that bank. In this case, agent is required to take RERA agent registration.
So
अमित जी वॉइस नहीं आ रही है. अमित जी वॉइस नहीं आ रही है.
पल्लवी जी?
हाँ जी सर.
तो हम लोग रैप अप करते हैं. थोड़ा वॉइस का प्रॉब्लम है, टेक्निकल इश्यूज हैं. वोट ऑफ थैंक्स दीजिए अमित जी को.
अमित जी आई थिंक उनका नेटवर्क चला भी गया है बिकॉज ही इज नॉट.
ठीक है, फिर भी we should give vote of thanks. Okay.
जो सर वो लीज मॉडल के ऊपर है, डॉमेट्री है वो लीज मॉडल के ऊपर है सर, और लीज मॉडल
अमित जी हम लोग रैप अप करते हैं.
रैप अप द सेशन एज वॉइस नहीं आ रही है आपकी.
ठीक है जी, ठीक है, ठीक है जी, ठीक है, ठीक है. आपका जो लास्ट क्वेश्चन था, अगर आप पूछना चाहें, अगर आप वो जो लास्ट क्वेश्चन है पूछ, फिर अपन रैप अप कर लें.
थोड़ा प्रॉब्लम है वॉइस का. तो आई रिक्वेस्ट पल्लवी जी टू गिव vote of thanks.
ठीक है.
Yes,
over to पल्लवी जी.
Yes. Thank you so much, Vishnu ji. Thank you so much, Amit ji. Actually, due to some network issues, अपने इसको continue नहीं कर पा रहे हैं. Otherwise, I would love to ask some questions from Amit ji.
Regret.
Thank you so much.
Like I needed to
no problem, sir.
already to Mumbai, so that was the reason. Like I'm like on my way to airport. Yeah, please.
No problem, sir.
Thank you.
No problem, sir. We'll try to arrange the session for RERA for other seminars also.
That would be needed. That would be needed because half an hour RERA Some days before I was taking a webinar for institute, and it took me 2.5 hours, and I was just able to complete half of my slides. So
Okay.
time would be required. Yes.
Yes, sir.
Yeah. Thank
Yes,
you
sir.
everyone for giving your valuable time, and look forward to meet you again soon.
Yes, sir. Thank you so much, sir, for giving your valuable time. And thank you, Vishnuji, for coordinating and moderating this RERA and MSME sessions, company law session. Thank you so much, every participant, for attending this Helpdesk seminar. Thank you so much.
Thank you. Thank you.
Now
Thank you,
we are
Amit ji,
wrapping-
Pallavi ji. Thank you. Thank you.
Thank you, sir. Now we are ending the session. Thank you so much.